Yo, welcome everyone to another live stream. Let me just get set up, fix the camera a bit. My hair looks weird because I just washed it. So yeah, if it looks kind of strange, you know the reason. Welcome to the Tuesday stream. So tomorrow we have the FOMC meeting minutes, which is supposed to be a kind of the most important event of the week, which tells you a lot about this week. Because if the FOMC meeting minutes are supposed to be important, we don't have much. So the week is pretty flat, I would say. What we had so far is we had the Canadian inflation, CPI median trimmed. It came in a bit higher than expected. Is it a big concern? I wouldn't say so. Also, let me set up the banner. Let's also do the Discord. Okay, that's how it's supposed to be. So it came in a bit higher than the forecast. Personally, I'm not looking to buy the CAD. I'm pretty bearish on the Canadian dollar, so I would mostly look for sell setups. Today we're getting did we get the GBP CPI? No, sorry, that's tomorrow. So tomorrow we're supposed to get the UK CPI, which is the UK inflation. Let's take a look at what inflation has been doing in the UK so far. So let's look at the Edge Finder. Data, inflation, CPI, and we have the GBP. So 2.6% was the last print. It's coming down. It's on a downtrend, which is, well, it's good to see. Let's go back a bit more. Personally, I look at the British pound as being more of a bullish currency than a bearish currency at the moment. So yeah, inflation seems to be falling lower. Let's look at the heat maps. Is the surprise index? Yeah. So in terms of the latest data, CAD and the Aussie seem to be doing fine. Rest of the market is pretty bearish. Rest of the market is in the red. The dollar is pretty red. So if you focus on the US, it's a whole lot of red. Only 18% of the data points are coming out better than expected. It makes sense, and it also fits my analysis where I'm bearish on the US dollar, where I'm looking for sell setups on the US dollar. I would most likely want to buy the Aussie dollar. That is what I'm looking at. So buying AU. It had a kind of a big blue candle yesterday, pulled back though. If we get a deeper pullback, a deeper retracement, I think I would be happy to get in. So Aussie dollar, I would like to get a pullback, and I would take a stab. I would take a stab at it because so right now it's August. The volatility is pretty low. The activity of traders is pretty low. Let me just also move the camera a bit. Is this a bit better? Am I in the center? I think I am. So the volatility is low. The activity of traders is low, and this may be a good time to get ahead of the positioning that all of the market participants will put on in September. So as people start coming back from vacations, as the bankers start coming back, the institutions, the hedge fund managers, the pension fund managers, they will start putting on positions at the beginning of September. So if you can deduce what will be the best position to take at the beginning of September, and if you can take it now, you can probably get a better price. That is how I'm seeing that situation. So on the Aussie dollar, I would like to get in August, basically, because I think the Fed is going to be dovish. I think the jobs market in the United States is falling off a bit. Let us take a look at the not inflation, but the GDP. So kind of on the lower side, maybe falling off a little bit. NFP, let's take a look at that. So we can go to labor, NFP. Well, the latest number was definitely low. Did it mean much though? I don't know. We seem to be falling off a little bit. But I would say whatever happens, like the Fed is not going to hike rates. So a repricing is needed. If you go to the Fed watch tool, so Fed watch tool, and I should bookmark this page. So let's go to trading, Fed watch tool, done. Let's take a look. By the end of this year, you have a pretty high chance of a rate hike, 45.3%. I would say that is too much. I would say a rebalance is needed. I would say it's supposed to be 95% chance for no hikes, for no change. That is how I see the situation. So once the repricing happens, the dollar should get sold. So on a dovish Fed, the dollar should get sold. And if we do get weak US data, like a weak jobs market, possibly weak GDP, well, that is definitely bearish for the dollar as well. So kind of the macro, in my opinion, is pointing to a bearish US dollar. The best way to execute that position would be to do Aussie dollar, so to buy it, or you can do gold. You can even do gold because the dovish Fed should be bullish for gold. Now, the concern here is that the gold is below the 200 EMA, which is a pretty bearish sign. But I'm not betting on like all-time highs. I'm just betting on a rally to maybe 4,700, 4,800, something like that. If you study gold, and if you look at the last couple of examples, let's say go to the monthly. So when gold drops, it can have rallies. Like this one. It can have some rallies during the big correction. So let's go back a bit more. This is a good example right here. So you had a big drop. This is, goddamn, this is 1980s. So price action is price action. You had the big drop, you had the big correction, and you had this push up, 82 to 83. Nice push to the upside. Didn't go to all-time highs, but still, if you bought it in time, you would have made this decent money. Let's just go see what the 200 was doing at that point in time. So that was the 1980s. 1980. So the rally was here. This was the rally. Okay, so it did actually cross the 200 DMA. Now, why am I looking at this? I'm looking at it because I'm studying the price action on gold to see what can happen in the future. Okay, so this is kind of the rally that I'm betting on. This is the rally that I would like to see happen now. Not a crazy run to all-time highs, just sort of a relief rally to the upside. If we go back to the monthly, and how much historical data do we have? So we did have a bull run in 74, then a pretty big drop. This is kind of what I guess most of the retail traders expect would happen now. Essentially a big bull run and then a drop and then a straight continuation to all-time highs without the without the decade-long correction, which I personally don't think is going to happen. And to get more data, we don't really have it. We have some kind of rough points, but yeah, I need a different ticker. I need a different chart to see the historical price. This is not going to be good. Back to the daily. The conclusion is that if you want to bet on a dovish Fed, if you want to bet on a weaker US dollar, you can get in gold. It is a an option, okay, and I have it on the watch list. The trade that I have running at the moment is Swiss yen, so I'm still in the Swiss yen short. I closed 60% for some pretty decent profit. I'm letting 30% run, and we will see what will happen. I'm still betting on a stronger yen. It's kind of more of a longer term bet, so it's not really a day. Well, it's not a day trade. It's not even a swing trade. It's more like a 2-month, 3-month position, or it's turning out to be a pretty long-term position. So I've held it from July 27th. We're soon going to hit a month of me holding this trade. Yeah. What else did I want to check out? Well, I wanted to look at the breaking news. My process is once per day in the morning, I usually go through the market moving, and I go through Forex, and I see what is in the red. So market moving, senior Iranian official, Iran has decided to shift its policy from defensive to fully offensive. That was yesterday. Does it matter much? No, I wouldn't say so. So let's just go through this list. Some German stuff. If you look at it once per day is enough. And if you look at it once per day, you just need to scroll until, let's say, the morning of yesterday, and to catch up on what's happening. Plus, you can avoid reading through all of the crap on Twitter or on like general news or CNBC, because this is all just filtered. You just get the thing that you actually need for trading. So let's see. US corporate blue chip bond sales. Nothing much happening. And it's normal, it's August. Like, people are on vacation. The volatility is low. I wish I had a ticker for the Forex volatility. I forgot what the name of it was, but you would see that the volatility is definitely on the low side. Yeah, I don't see nothing. I don't see much here. We can go also check out the currency strength. Currency strength chart. No, not this one. Is it this one? Yeah, it's this one. So what's happening today? Okay. So it looks like the NZD is really getting kicked around. Let's take a look at AUD NZD. Nice move up. Nice move up there. What about NZD USD? Yeah, I mean, like, it's fair that the New Zealand dollar gets kicked around. You have a massive amount of rate hikes priced in for the RBNZ. They can't really afford to hike that much. Like, their economy will not survive it. So to me, that's completely normal that the market is punishing the New Zealand dollar. It makes a lot of sense in my opinion. I do want to mention, if you want to join the A1 Trading free Discord, you have the QR code on the screen, and I'll post the link in the comments right now. So let me get my link. Stream links. Free Discord. Comments. Okay, so free Discord. Link is on the screen, in the comments, in the live stream description. Join for free. If you want to become a paid member, you can do that as well. And you can use the code Marco to get 15% off. This code works for the A1 Trading Discord. It works for the Edge Finder. It works for the Stock Box. Pretty much it works for everything. If you want to read the reviews of A1 Trading, definitely do. Go to the A1 Trading Trustpilot. 4.8 out of 5. 243 reviews. Read through them. Okay? Check out the ratio of 5-star to 1-star. Read what the traders are saying, and you will see that basically the products that we offer, I would say, are best in the space. The community, I would say there's no better Discord community. When it comes to trading, you have Nick, Chris Pulver, Ivan, Alan, me, and a bunch of other successful traders that are getting steady payouts from prop firms. So You can't go wrong. So all of the links will be in the description. Let me see the comments. Gold analysis. We have Iran news that will move the market more. Is gold bulling back? Good day, Nick. Please do analysis for gold. So it's not Nick, it's Marco. Nick will be joining a bit later. You can find the full schedule on the A1 Trading website. Good morning from Florida. Good morning. Could you look at HD? HD. Home Depot? Like the stock? So to me, just a second. So Home Depot, where's the 200? Let's add the SMA 200 color. Let's do red. We're below the 200. So for me, anything stock related that is below the 200 SMA is a no-go. Absolute no-go. I'm not interested at all. Where are you from? I'm from Croatia. GJ, Aussie Swiss. What about gold? Hi, Mark. You're a cool man. Thank you. Yeah, it got earnings today. Oh, really? Let's take a look. Yeah, earnings today. Okay. Personally, as I mentioned, I wouldn't touch anything that is below the 200 SMA. That is just the way I trade. That's basically the way that most stock pickers trade. If you follow Kulamagi, if you follow Ariel Hernandez, if you follow, well, basically the Twitter, all of the bunch from the Twitter, 200 SMA is the key thing that needs to get broken up. Or the price needs to be above the 200 SMA. If it's not, you just discard the trade idea. I just came back from a Croatian holiday. Amazing. Where did you go? Which city did you visit? And did you like it? Let me know in the comments. So I don't have much to talk about except my watch list. There's not a massive amount of movement. Like Bitcoin is doing absolutely, well, it did have a bullish day yesterday, but overall it's super flat. It's doing nothing. Oil is staying elevated. So if you're looking for an indicator for the Middle East conflict, Brent oil is the best one. So just look at Brent. Brent is currently elevated. It is in this range-bound triangle. Is it a massive problem? No. Is it a massive impact on the world? No, it doesn't seem to be. The markets seem to have moved on from the story and they're focusing on something else. So Brent oil, it's fine. It's fine. It's elevated. And yes, at the gas station, if you're pumping diesel or gasoline, it's more expensive, but it's not massively more expensive. So we're kind of moving on from that, which in my opinion is good. We can clean up the narrative. We can also get some new trade ideas, focus on the economic data for once, and we don't have to trade the headlines, because you did get some headlines from the market moving news. Okay, you did get some headlines, but they're not moving the markets much. I mean, yes, on the 1 minute, but long term, it's negligible. It's not important. We have started to move away from it. Let's check the SPX today. Stocks are down on the day, so stocks pulling back a bit. I mean, that's to be expected. We had a pretty big leg up. A correction is definitely needed. So stocks taking a bit of a breather, pulling up to some EMAs. So we will see what will happen. Am I flagged? I don't know. What does flagged mean? I didn't do anything on the back end, so I don't know. Dubrovnik, it was beautiful, nice beaches. Where are you from? Croatia? Okay, awesome. So Dubrovnik is amazing. And there's like a direct plane from New York to Dubrovnik. So Alan actually visited Croatia this summer, and I met up with him. Alan is another host on the show. So yeah, if you ever want to visit, if you're from the States, you have a direct flight from New York to Dubrovnik. I absolutely recommend it. It's probably the best place to visit in Croatia. I am from the capital, so from Zagreb, from inland, which kind of sucks because it's like 35 degrees and I cannot swim in the sea because the sea is like 2 hours away. But on the weekend, I go to the seaside, so it makes up for being in this dump in the capital. Okay, I want to talk about stocks. I'm not sure how you guys feel about stocks. They're moving at the moment. I'm in a couple of positions, so it makes sense for me to look at them. I got taken out of RHI for a small profit. I took some off. I took half off in profit. I put the stop loss to break even. So I'm out of that. VLO, I'm still in. VLO is a runner. Looks pretty good. CoreWeave is, I'm in this position. The pre-market is pretty bad. They had an earnings gap up. It's an episodic pivot trade, as they call it. The reason for the earnings gap was pretty good. So if their GPUs, the value of the GPUs will be able to be, or the lifetime expectancy is not going to be 6 years, it's going to be 9 years or maybe even more. So they can take all of those old GPUs, they can reuse them, and they can get more revenue. So the valuation should be higher for CoreWeave. Also, where's the 200 in this? Okay, it's fine. So CoreWeave, not looking the best with the pre-market. We'll see what happens. Almost got taken out yesterday. Part of the game, you know. I'm still in though. Dell got taken out for a loss. So Dell just faking me out. Fake outs all over the place. Super popular stock on Twitter, and that's why I probably should have like gotten in on a shakeout, on a fake out, and not exactly at the top. I don't know. You know, it fit the plan, so I took the position. Plus, the win rate for this strategy is only like 20-30%. So you're going to take a lot of losses before you catch the big winners. The key is when you do catch a winner, that it runs for like 5, 6, 7, 8 R. So it pays for all of the losses and then some. Norbert says, I'm from Romania. We came by car. It's crazy. Oh, okay, cool. Yep. Well, hope you had a great time, and do visit again. I'm sure the car ride was pretty long because the highway is super crowded, and it's a mess. So I apologize for the mess on the highway. I'm from Ethiopia. Great. So welcome to the stream. This is my watch list. This is what I have assembled for this week. I'm hunting for breakouts. Things don't seem to be lining up that well. Like the best ones are KMX, Relay, GPC, IQ, VDK. They're forming some clean breakouts. I'm going to buy the breakout if it happens. And the ones that are setting up are on the list, as you can see here. So some favorites, FTNT, Eli Lilly, GH. Took a nice win on GH right there. So that was good. What else do I like from this list? That's about it. Like if you're looking at the sectors, if you have the stock box, you can do it pretty quickly. So if you go to the top sectors page, oil and gas, software, the best ones at the moment. So I'm trying to pick the best winners from oil and gas and software. Basic materials, I haven't seen much opportunities, but biotech is a good one as well. So anyway, if you have the stock box, you just look at the top sectors. You find the ones that that have a high score, and you pick the best stocks from the sector. By the way, if you want to get the stock box, the link is in the description. And don't forget, you can get 15% off with the code Marco. So now, the reason I'm focusing on stocks at the moment is in trading, it's all about where's the money flowing. I just want to briefly touch on that because sometimes I'm trading stocks, sometimes I'm not. Sometimes I'm trading gold, sometimes it's Bitcoin, sometimes it's Forex. So you need to know at any single point, there's going to be one asset class that'll be the hottest. Let me show you. Gold was hot in 2025. It had a massive run to the upside. Bitcoin was great in 2024 and a part of 2025. Currencies, well, they were amazing in 21 and 22. Nowadays, the volatility has died down a little bit. Okay, the volatility has gone down a bit, especially if you look at the DXY. Like the DXY is overall still stuck in a range and has been stuck in a range ever since like June 25. So it's hard to take opportunities in this range. Yes, I'm still taking positions, but I'm not extremely active. But when it comes to stocks, and I'm talking about the SPY. The SPY has trending periods, it has crash periods, and it has range-bound periods. Now, this strategy that I'm doing, and that most stock traders are doing, if I'm being honest, trend followers, they want to see a trending market. Like this one, like this one, and like this one. The current one, we had a nice breakout to the upside. And well, there's a high chance it continues to trend to the upside. So in trading, you can give yourself the best chance of success if you can follow the money. If you can follow where the capital is going, what's hot at the moment, and then just follow the trend. It's called trend following for a reason. And if there's no trend, you can't make money. For example, a big mistake that I see beginner traders do is, like, a lot of you came into the market in 2025 during the gold bull run, okay? Which is totally fine. Like, I came into the market way back in 2018. I bought the top of Bitcoin and I lost money, but it got me super interested in the markets. Essentially, a lot of you came in the market in 2025. You probably lost money on gold. That's just the stats. You probably bought the top. And you probably continued to trade it in 26. That was a pretty bad proposition because in 26, gold was just going lower and lower and lower, and then it was flat. Yes, it's starting to break out now. Yes, it's starting to look a bit better, a bit more bullish, but it was doing nothing for months. And if you were trading through this, it was just taking money away from you on most trades. So the best way to trade, I found, and from my experience, and from Nick, and from Chris Pulver, and from Ariel Hernandez, let's say, and from Brent Donnelly, the best way to trade, just follow the money, trade what is hot at the moment. And at the moment, that would be stocks. That would be the SPY breaking out in an uptrend. So I'm focusing on my stock strategy. That is about it for my segment. Let me just look at some more comments. I'm also in CoreWeave and Bloom Energy. Nice, congrats. Those are good picks. Cliff, oh, hello, Cliff. So that is about it for my segment. You have James coming on in 30 seconds. I will play a quick transition. And you can catch me again in 2 hours during my second segment. So thank you for watching. Do be a bit patient this week. The opportunities are not plentiful. If you're going to do something, maybe best to do it on stocks. So yeah, thank you and see you in the next one.
If you're looking to get funded and want to save big on prop firms, check out our website, a1trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by one-step and two-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare two firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content.
Hello, ladies and gentlemen. How's everyone doing? Happy Tuesday. Hope everyone's good. Hope you're all having a good start to your weeks. Okay, so what is going on in the markets today? Let's take a quick look at the Edge Finders readings before we go any further. Bear with me. So pound yen still bullish. We've got gold still bullish. Pound dollar bullish. Silver, pound New Zealand, pound Swiss, euro dollar. Okay, nothing has changed really since we sat down together yesterday. However, what I am noticing here is pound yen, pound dollar, and pound Swiss have all come to the downside. I'm fairly sure we had some UK data come out this morning. Not too sure what it was, to be perfectly honest with you. But we can take a look at that right now, actually. So let's go to economic heat maps. We'll go to the UK and we'll just see what's changed. So what's the date today? It's the 18th. So it's unemployment rate that came out this morning at 4.9, up from 4.8. Not a surprise. The pound actually not looking very good at all here. 33% reading. The US dollar wasn't far off that either. Oh, actually, I stand corrected. Never mind. The US dollar is down at 18.8. Sorry, 18.18. Crazy. So we do see relative strength between the UK and the US. Hence, we're still getting the pound dollar long signal. But it's looking bleak, to be perfectly honest. It's not looking fantastic. Sorry, guys, my camera seems to be playing up over the past couple of days. I think, to be honest, it's the heat in the UK. My phone, I've got the iPhone 15 Pro Max, and it just has that overheating problem. And I think that's what's going on here. It just seems to disconnect now and again. So I'll keep trying to get it back. But in the meantime, what is Helen saying? I started my investment with 5,800 a month later. We've grown it. No, you didn't. Helen, you are just yapping for the sake of yapping. Stop trying to scam people, please. Yeah, my camera doesn't seem to be coming back, which is a little bit frustrating, but give me a second here. Technical difficulties. And again, I do apologize. My audio is still obviously not going to be where it was or where it normally is, I should say, because I'm still away from my desk. Ban. Yeah, I can't. I'm not an admin, unfortunately. I'm just a guest. So there's nothing I can do about these scammers. But yeah, it's all good. Right, I should be back for the next 5 minutes until it cuts out again. Okay, so yesterday we were looking at pound New Zealand, Australian dollar New Zealand for long positions. It seems like actually so far these ideas have been playing out. Now, of course, talking a little bit from hindsight, the pound New Zealand idea didn't fully flesh out because I was looking really towards the 61.8 level for a potential entry. We've not got that. Now, the downside here is we've still got this 84 bearish trend. You know, we've got the 200 that is currently still hanging above the 50 moving average. We've just seen a rejection here of our 200 moving average as well. So the technicals are okay, but it's not something I would be that interested in trading right now. Again, we do have this daily fib level from the low to the high. The fib zone does line up kind of with this previous structure. You can see we acted as resistance here, a little bit of support, a little bit of support here, and again here. So it's a little bit of a rough, loosey-goosey type of level, but the idea is there. However, there is no entry for me at this moment. Now, Aussie New Zealand, however, has been doing really well. So yesterday, what we were looking at is this push that we've had off the fib zone, also lining up again with previous structure on the left. Now, it looks like we're also about to get the moving average cross here between the 250, just indicating the trend has changed. You know, we've come out of this downtrend and potentially started a new bullish trend. So Unfortunately, I have missed the entry, so I'm not in this trade, sadly, but I am still looking to get in. I still like the idea of Aussie New Zealand to the upside, and I do still stand quite firmly on the bullish side. Camera's gone yet again. Tell you what, let me just switch to this one. There we go. A little bit more invasive, but I think this one will have to do. It's a FaceTime camera. CAD Yen. Jeremy, good to see you, my friend. Hope you're well. Okay, so what else do we have here? Hold on, let me just bear with me. Take my phone off. There we go. So we got pound yen. What did you ask for? CAD yen. Yes, CAD yen. Okay. Do we have CAD yen? We do. So CAD yen is very bullish actually with a score of 9. So this could definitely be something that we want to pay attention to. So as far as I'm concerned, the yen pairs are still a very obvious buy. So something I have been talking about, is obviously there's been no policy change. And I don't really care, even if the Bank of Japan does hike. The yield gap is still quite significant enough to warrant a carry trade dynamic to continue, although maybe slower than what we are used to with these yen pairs. So I don't really see any issue just continuing to buy. I think the only real thing that could cause yen pairs to significantly deteriorate and unwind the carry trade idea would be aggressive hiking by the BOJ and also cuts by other central banks, and also potentially some sort of risk off flows into the yen. I think if we got those three things aligned, that would be a pretty big death sentence, specifically for like dollar yen, pound yen, euro yen. But as things stand right now, yes, it does look like we are going to get the Bank of Japan hiking rates maybe to 1.25%, maybe 1.5%, but I just don't see it as much of an issue. The carry trade in that case does still remain relatively untapped, although a little bit of a downside, but it's not enough, in my opinion, to save the yen. Okay, so with CAD yen specifically, we know we want to be buyers. We've got the edge finder that's bullish. We've still got the policy regime or the backbone behind the yen pairs that's in play. There is again, nothing that's telling me to go short. So from here, I don't see a way in other than fib from the low to the high and essentially just keep following wherever the high will be printed. So let's say, for example, the high gets printed here, just for argument's sake, and then we get a retracement back into the fib zone and then some sort of continuation higher. That would be my criteria to get into this market. But as things stand, again, I can't really do anything. I do remain long on dollar yen, though. So these positions are doing quite well. I've got a position down here at 156.95 and another one at 158. Oh, sorry, not 159, 156.95, and another one here at 158.2. So, yeah, as I said, I think they're completely valid positions. I don't see another reason or anything else going on there. Same on AU. Yeah, I'm actually already in AU, and it's doing quite well so far. So yeah, this is the position. In fairness, this isn't my trade. It was a trade by one of the traders I've hired. It's elite traders, but yeah, it was a great position. But yeah, I think the Australian dollar is still a pretty good currency to be a buyer of. Actually, I think there's good relative strength pretty much across the board with most of the other major currencies. Let me just hide this. It's really distracting me seeing my own face keep popping up. There we go. I don't want to ask for a specific pair. What are you looking at? That's you know what, ASAP. I love that. Everyone always comes here. James, what do you think about this? No one asks me what I'm looking at. You know what I mean? It's always, James, look at this. That's nice. No, but in all seriousness, there's not much I'm really interested in doing. I'm already in pretty much the markets that I already want to be in. So I'm already long gold. I'm just waiting for a pullback to get into a larger position and put some more size into this market. So I'm long from gold at around 4,000. I've got another one around 4,050 or 4,060 if we round up. But these are very small positions. They're just 0.01. So I would really like to get this daily pullback here. So from the daily lows down here to the daily highs, the 61.8% fib level here lines up with these previous highs on the daily or the previous resistance. So I'd love to see a pullback there and a continuation higher. So That's one of the main things I'm watching at the moment. As I said, I'm already long dollar yen. Euro dollar, I do still like the short side, but in a very specific way. So I'm playing euro dollar shorts more from a historical standpoint rather than a fundamental side, which isn't normally how I trade. Normally I'm very strict. It's fundamentals, trend, pullback, enter, and that's it. Or edge finder reading is what I mean by fundamentals. But euro dollar, I'm playing largely the seasonality behind euro dollar, the euro and the dollar individually, and also the pair obviously combined. And then of course the weekly time frame that we've been looking at, or I've been looking at quite a lot on this sort of trend line that we see that's been playing out since 2018. So yeah, I'm happy to stay short, but it might be a bit of a timing issue here. It might get taken out, it might not. However, if we scrap my idea and we follow what I would normally want to do, which is again, edge finder, trend, pullback, continue. This actually looks a lot more attractive on euro dollar here. So we've got the bullish trend here on the H4. We obviously draw the fib from the lows to the highs. Obviously, I'm using the daily highs in this case here. So a pullback, very similar to gold actually, of about 61.8% here would line up with this previous resistance for a continuation higher. And this is also a break, retest, a continuation pattern. So I really like it. But yeah, there's really not much that's bothering me. Or when I say bothering, that's not the right word. There's nothing that is got me interested really. I do like the idea of being short on the Nasdaq. I think Nick covered it in, was it the video he published yesterday? I think he spoke about the Nasdaq and COT positioning be heavily short. Was it the most short they've ever been or something like that? It was a large amount. It was something quite significant. And obviously we've got the bearish edge finder reading. We've got the resistance here. I personally do sit a little bit more bearish on the Nasdaq due to tech valuation or general stock valuations, AI, all those things. Some of you may know my opinions there already. So yeah, I wouldn't mind being short, but I can't get in yet. So what I'm looking for in the Nasdaq is a new low to get printed, wherever it may be. It might not be here. It could be down here. It could be here, or it could be here. I don't know. But obviously this is just a visual representation. Some new lows get printed, or a new low gets printed, sorry. Then a pullback into the fib zone. And this is then where I can execute a short position and look for a continuation lower and possibly correcting some of this left side, or at least back into around 26,000 to retest the previous all-time highs. So there's that. Then yeah, Aussie, New Zealand, as we just spoke about. I also do quite like silver, but I'm already in gold. So I'm really now in a position of whichever market gives me this pullback. So I don't mind buying either one. I think actually I would rather buy silver than gold at the moment, just because I just like silver more, especially from a swing trading aspect. I think it does move more on a percentage basis in terms of, the percentage moves in the market. So yeah, I'd love to be long. It's, again, same setup as gold, fib from the low to the high, pull back into the previous highs into the fib zone. We've got the bullish trend on the H4, just look for a continuation, and we've got the bullish reading on the edge finder. So yeah, we'll see how it goes. Anyway, that's it from me, ASAP. Looking to short US dollar against GBP, CAD, AUD, and metals. Wait, hold on. Have I missed a message here? Yeah, I have. 2288. Good to see you, my friend. Hope you're having a good day as well. Hello, James. Another beat by GB on jobs market. Yeah, we just looked at that, Sluggy. We saw the GP pairs on the edge finder dropped about 3 points in the past 24 hours. You already took the long position. On what, Luna? How about Swiss? Oh, dollar Swiss. Okay. Just hold on. Let me catch up with the chart, and then we can go back to the charts. What's my entry trigger on gold? My entry trigger really is just a bullish candle close. I just want to see. So when I'm trading a fib like this, or any fib actually, I typically, unless I'm very, very sure of the idea and everything's aligned, we've got the central banks, that there really isn't much to throw off the trade. So in those rare circumstances, I'll just market execute at the fib. However, what I normally do, and what I will do with the metals, is wait for the pullback. I won't enter immediately. I'll wait for a bullish candle close, and it's just a very, very small thing, but it just gives me a bit of extra confidence. It shows me that buyers have stepped in, they've taken a little bit of control, and it's just a very small safeguard for the position. It doesn't mean that much, but again, it's more just something I like to do. Okay, so we'll look at dollar Swiss. Sluggy says he's shorting the dollar against some of the other currencies, so we can take a look at that as well. I caught Aussie US dollar 2, James, if you remember. Very nice, Sluggy. I don't remember, but well done. It's always good, Sluggy. When we talk, we seem to typically be on the same side of things, which is nice. Jeremy asks for gold. I think we've already done gold. Did we not just do gold? Am I trading with FTMO? No, I don't do prop firms. I do very rarely, but no, at the moment I don't have a prop account. Are gold and AUD correlated? Not in a direct link way. So Australia more is like iron ore, not necessarily gold. So what you'll find though is they are kind of inversely correlated on a risk standpoint. So when we have a very typical risk off move or risk on move, you'll often see them moving in opposite ways. Obviously, we've got the Australian dollar that is inherent or typically viewed as risk on. We've got gold that is typically viewed as risk off. In terms of, you know, like the Canadian dollar, the Canadian dollar and oil, for example, it's not really the same. They're equivalent. God, I can't talk. They're equivalent more, yeah, is sort of iron ore and a few other things like that. Luna, CAD yen. Okay, we did actually just look at CAD yen. And we've got some on Twitch. I think this is the first time I've seen a Twitch message, actually. Diggs, by the way, what's up with you, my friend? Hope you're well. Good to see you here. How about gold now? We've just done gold as well. Hi, James. We'll look at macros first, which aren't as much subjective. That is very true, Sluggy. Yeah, we do trade in a very similar way. Okay. So what was it we were going to look at? Oh, dollar Swiss, and then Sluggy's dollar pairs. Okay, dollar Swiss. Let's start there. I can't wait to get back to my desk. I don't know if you guys have ever traveled and worked, if you're like an entrepreneur or anything like that. I hate it. It is such a pain. Normally, I've got a ultra wide monitor above the laptop where I can see the chat and I can have other tabs to pull on screen. I've got my mic. This is really, I hate it. So inconvenient. Anyway, what we're looking at, dollar Swiss. What do we have here? So we do have the bearish edge finder reading, and this is interesting because this is what we were looking at yesterday. So something I raised was that yes, the fundamentals are there. And I do kind of like it. You know, we've got the highs and the lows on the fib, pretty decent fib zone here that lines up previous structure on the left. Typically, or it seems okay, is what I'm trying to say. The problem that I mentioned yesterday, however, was the 200 moving average. What we've seen previously was the 200 acting as this dynamic support. So we could see price breaking below, coming straight back up, attempting to come lower again, coming straight back up again, and again over here. So my concern at the time was this wick that we saw to the downside, and again, this sort of 200 acting as support. So it seems like this has happened again, and obviously we are now coming back to the upside. So as far as I'm concerned, I wouldn't want to be in this market just yet. What I would need to see in order for me to feel a bit more comfortable here is another rejection of this fib zone. So let's say price comes up, then comes back down, breaks the previous lows, whether it's, you know, the actual previous low or just this sort of support level, either one is fine, and also breaks below this 200 moving average. Then we've got, obviously, again, the break of the lows. We've got a little bit of a trend change signal by breaking below the 200, and those little confluences, you could just tell me that sellers are beginning to actually take control, and the technicals are a bit more aligned, and the trend is beginning to form. So, as I said, I think it's okay, but it's not quite ready for me to be in it yet, personally. I just want to see a bit more development and confirmation. How many years of experience? Well, I've been from very, very beginning, when I first started trying to trade. I was like 8 years ago, give or take. But actually being on the more serious side of macros and swing trading and things, I would say maybe 6.5, 7 years. I spent maybe a year to a year and a half sort of just gambling and trying to day trade and scalp and blowing money and things. And then I took a bit of a break and tried to actually learn what I was trying to do. So Anyone shorting crypto? I see bearish scores in the past days. So the thing that I've been talking about specifically actually with ETH, because actually let's just double check. Is ETH still there? Yeah, so Ethereum is still getting a very bearish reading of 7. So my whole thing that I've been talking about with Ethereum actually was just the lack of any substance. There's just no reason to be buying Ethereum or really any other crypto as far as I'm concerned. That goes for Bitcoin as well. There are people obviously disagree with that, and I understand. This is just my opinion on it. It's just not something I've ever needed or wanted. I've never once seen any reason for me to have it, and that means where is the mass appeal? So the way I see it really is, you get these euphoric times where you get the, whether they're talented or skilled or lucky, it doesn't really matter. The people that do trade crypto and they catch these huge runs, they post it all over social media. They tell all their friends. They start buying, around here thinking, oh, we're going to catch this huge move. We're going to invest in this crazy thing. And then it crashes. And then the same thing happens. And then it crashes. And it just continues. That loop just happens over and over and over again. In Ethereum, that's been happening since 2021. So my whole point here is I don't think there's anything worthwhile buying. Again, I'm 28. Never once have I ever needed crypto. I've never been asked for crypto unless someone's trying to scam me. I think it's a completely useless asset. That might change in the future. I'm not saying it's completely useless forever, but right now I just do not care. I think if you have a few $1,000s, there's better things to do with it than buy some digital coins that do nothing for you. And if you could bring up the investment side of that, and you could say, oh, well, it's an investment. I think it's going to go higher. Okay, well, historically, the evidence for that is, you could catch a massive percentage return, but you could also lose a massive percentage return. I think, some stocks would probably be better. But again, this is all my opinion. I'm not a massive crypto guy, and that's the reason I'm not a crypto guy. I just don't really like it. Although I know I didn't actually address your point of what the market. So it is getting a very bearish score. Sorry, it's a bit of a tangent on my part. So on the weekly time frame, we just had this golden cross or the death cross, again, whatever type of terminology you want to use. So the 200 is now crossed the 50, indicating we'll come out of this longer term bullish run into now a bearish trend on this weekly time frame. We are seeing consistent lower highs getting formed. I think we've got a very clear level of support through here. So it wouldn't be a surprise to me if Ethereum ends up around 1.4K. And that would just be sort of the high of the sort of support level we've got through here. From that point, I think it heavily depends on the landscape, really. How the situation in the Middle East goes, how tech performs and Nasdaq, all these different things. Again, I'm not a crypto trader. I don't know all of the drivers and things and all their complexities, but I think it is really heavily dependent on the landscape and the environment that we get over the next few weeks. I wouldn't expect Ethereum to go all the way back down to 400, 500, 600. I would say probably sort of more range bound like that off this support level. No new highs really, but also no real structure there. So that's just my 2 cents. Again, I'm not a crypto trader, as I already said. So I just want to make that very, very clear. Take it with a pinch of salt. So is anyone shorting crypto? I see bearish scores. Yeah, I wouldn't want to be a buyer, but I also wouldn't really want to be a seller at this point. I think the move has kind of happened. If you're going to be short, I think you should have already been short. I think the room or the asymmetric risk just isn't really there. If you could maybe catch some sort of short position into the support, again, around this 1.4K level, but then where's your stop going to be at the previous weekly high? Again, it depends what time frame you trade. This is very arbitrary or loose, whatever you want to, whatever word. But this would be like a 1-to-1. So I just don't see the, again, I just don't see the appeal. Cedric, you think it's worth DCAing? What do you think is worth DCAing, Cedric? Are you talking about Ethereum or crypto or what? Gold, yeah, we've already done gold, but we can do it again shortly. I'm here for another 35, 40 minutes, so don't worry, we will get around to things. We don't care about crypto. Yeah, I agree. Ethereum and Bitcoin both getting very bearish reading. Yeah, it's just the thing is, I get it. They have had fantastic runs, but I view crypto very much like a stock, and I'm not a stock trader either. But if I'm seeing people wearing a brand all the time, or they're viral on social media, or everyone's drinking their drink, or you see it or you use it and you love it, or you see other people loving it. I just don't see that with Bitcoin. All they ever say, oh, we're having the altcoin run or alt season, or Bitcoin's going to skyrocket. It just doesn't. I just don't see it. I just don't care. Okay, we're going to move on. Oh, you meant dollar Swiss DCA and short side. Interesting. Okay. Yeah. Okay. I actually could get on board with that, I think. So I'm just thinking here. So how would you do this? Yeah. Okay. So yes, I am going to clear this because I don't really like it yet. So I agree with the short DCA idea. The problem is though, the swap side. So you will be losing money by selling this market inherently due to the swaps, which is okay. It's not really a trade breaking idea, but it is something to account for, especially on this weekly time frame. There is potential for dollar Swiss to come higher. Whether it does, I don't know. But of course, we've got to look at the risks for a trade, not just the benefits. So if we do end up seeing dollar Swiss end up running higher towards this 200 weekly moving average into, let's say, the previous lows over here, kind of what we've seen over here. We end up coming to this 200 moving average on the weekly, rejecting and continuing lower. So we've got the short sort of behavior. We've got the edge finder reading. It's looking great. So my point is, I wouldn't want to, I wouldn't want to short it here. Because if it ends up running here, again, a weekly time frame, this whole duration, this could be 2 months maybe, where I'm just losing money on swaps. And then you're adding in as well on DCAs. You're going to just end up losing more. So you would have to figure out your way around that. So it would be maybe a case of adding a very small position, a very small sort of starter or reference position. If it shows no signs of working out, we break this high here, maybe just cut it and wait for this level to get hit. If it does start working out, then you can start adding a little bit more size. But it's really just a case of trying to mitigate the risk and mitigate the downside whilst playing on a longer term idea. So again, I do agree with the short. It's just taking care regarding the fees that you're going to have to pay. Just got in. What's your thoughts on pound Swiss? Long or short, King of Kings? Hold on. Where we are here. So yeah, we were looking to go long because the edge finder, is it still bullish? That's a question, isn't it? Is it still there? Pound yen. Oh, it is still here. So it's still very bullish with a score of 8. So I wouldn't want to go short at the moment because we've still got the H4 that's bullish. I think this trade idea is gone, unfortunately. But yeah, the H4 is still bullish here. The daily is also flipped bullish with the moving averages. So yeah, as I said, the trend wise, I'm not interested just because, again, trends there, fundamentals there. Being a short seller for me doesn't make sense at this time. However, it's basically the same as what I just said with dollar Swiss. So I would actually be quite interested in going short once we start approaching this 200 weekly moving average, just like, again, as we looked at dollar Swiss, we've done previously. So yes, I'm interested in going short, but it's just not ready. Again, the edge finder is bullish, tell me the fundamentals are bullish. So I'm not going to counter trade that. But as soon as the edge finder can start losing some of that bullish score, and as this market does approach its 200, I think it might be worth building up a position. But again, the swaps are a bit of an issue there. However, back to the initial idea here. I do think being a buyer in the short term is worthwhile because you do get paid swaps. And as I've said 3 or 4 times now, the fundamentals are bullish. So yeah, I would quite like to be in, but it's very difficult, actually. It's not a very forgiving market. So what I mean by that is that, yes, we're in an uptrend, but the pullbacks we're having just aren't very clear. I'm trying to draw fibs and find these, what I call measured pullbacks by 50% or 61.8%. They just don't seem to happen. And if they do happen, I miss it. It's just a very sort of choppy market where here we move sideways for a couple of days and then just run higher. There was no real pullback other than this, I suppose, here. So yeah, I would say it's a bit of a ugly market, but yeah, longs I would say makes sense. So yeah, King of Kings, if you do want to be a buyer, I wouldn't oppose the idea, but I would, as I said, be very, very careful as we do approach this 200. I have no evidence really to say that we would have a reversal there, other than the fact, we have seen that on this weekly. So, again, if we zoom out, we do sometimes break above, but very quickly gets sold off back, below, and then overall continue to the downside. So I would say your potential risk to reward here maybe is quite limited depending on your exact position. So let's say, let me just mark this up real quick. So let's say here, let's go back down to the H4. So the take profit is where the 200 weekly moving average currently is. So if you had a stop loss, this will be super, super tight. Bearing in mind the Swiss pairs spreads can increase quite significantly on market close and opens. So this could actually just stop you out on a market close. So you might want a larger stop like this, which would just give you a 1-to-1, which, some people are cool. I don't mind a 1-to-1 sometimes. But again, it's just being aware of these little things that you might want to make a note of. Okay, so we're still getting questions about gold. We'll take a look at gold now then. Just bear with me. Friday options are expiring. This could unwind fast at these levels, and Q's also getting bearish score. Okay. Also, divergence is there in COT. The short NQ. Yeah, we looked at that yesterday, Sluggy. It is looking a little bit of a issue, to be honest. Again, I think I've spoken about this quite a lot recently, so I don't want to keep going over it, but I do have some real concerns about the not just the US markets, but more specifically the US tech sector. I just have a really bad feeling about it. Now, I'm not doing anything about that. I'm not in any short positions or anything, but it's just that thing is if the edge finder can sustain a bearish reading and we can get trend changes, technically speaking, I'll be straight into a short position on a potential entry. Anyway, let's move forward. True, but before the move down, it could wreck the bears. Do you mean pound Swiss? I'm not sure which market you're referring to there. Karomi's back. We're not seeing a chart, we're seeing a loop of the live vid. Yeah, I know. Trust me, I'm looking at the same screen you are. I do apologize though. It's because I'm on one laptop, so I can't see the chat and the charts at the same time like I normally can. So this is the best I've got. Okay, so let's take a look at gold. So what we've, as I said, we've already covered gold quite extensively. I'm fairly sure Marco will have covered it. Nick's covered it in his video yesterday. I've been covering it past week or two on the stream. So we've done a lot of coverage on gold between all of the guests. So I don't think I can really give you anything different because, to be honest, all of our ideas seem to align in most aspects. So there's obviously differences in certain places, but either way. So what we have is gold reading bullish. So let's actually do a bit more of a deep dive. Let's open the asset scorecard here. So we have crowd sentiment actually neutral. Why is that neutral? So that's weird. Retail positioning is 80, let's round up and say 84% long. So to be honest, I would actually give this a, oh wait, hold on. I would actually say, yeah, it's more of a bearish reading, to be honest, because retail is long. We counter trade them. So I would write this off actually as a little bit of a more of a bearish lead. I don't trade retail sentiment. It's not a big part of what I do, but I did see someone ask in the chat. So yeah, retail is majority long on gold. I think they have been for a long, long time. I don't really know if they actually flip. Technicals here. So we have the H4 daily trend and seasonality are bullish. So that's great. Institutional activity doesn't really tell us anything here. Net positioning is bullish, which is nice. However, the latest buy and sell, so the week-on-week change, again, not really anything that interesting. Slightly bearish move, but nothing significant in my opinion. Economic growth is bullish, inflation is bullish, and the jobs market is very bullish. So we have what I consider the three pillars. So that is, again, economics, inflation, economic growth, inflation, and labor, the three pillars. They're all bullish, which is fantastic. Now, something else I really, really like to see on the Edge Finder is this sustained move. So we can see we had obviously this really bearish reading over here. And that was when the dollar was doing quite well, like 1 to 2 months ago. We then slowly changed. We had the sort of neutral to slightly bullish readings. And over time, the score has just been really increasing gradually and consistently. I really like that. It just shows me that the score is meaningful. It's not just a one-time flip on a data print. It's actually a bit more substantial. You know what I mean? So the fundamentals are bullish. So we know we want to be buyers based on the edge finder. When it comes to technicals, it's super, super simple. Fib from the low to the high, looking for a pullback into the 61.8% level because that lines up with the previous structure on the left where we had this used as support, resistance over here and then support over here. So we've had the break, looking for that retest into the fib, again, break and retest type pattern, and then looking for continuation higher. It really couldn't be any more simple, in my opinion. I suppose, yeah, one of the potential problems here is the dollar. Yields are still a bit elevated. I'm not sure what oil's doing today, actually. Let's take a quick look at oil. Bear with me. Yeah, so oil is quite supported, although on the current daily candle, it's seen a little bit of weakness. But overall, we have been seeing oil moving to the upside, which, we've seen is quite bullish for the dollar. We're currently also sat in a fib zone on the dollar on this weekly time frame as well. So there is maybe here an idea of actually the dollar picking up. I don't have the data to support that. It seems like the Fed hiking, the Fed hike expectations have been decreasing. The US fundamentals are very, very lackluster. So this idea is more of just a technical idea, not based on the reality of the fundamentals or the environment right now. So this is one issue. If we do see the dollar start to pick up and we see escalations within, Iran and the Strait of Hormuz, we could definitely see this play out. However, that's very much a will it, won't it happen thing. It's not really the fundamentals are telling us this. That's what we want to do. So does that make sense? Hopefully it does. Example yesterday, continuation today. I won't touch indices, long only after the midterms. Yeah, that could be a good idea. Metals are better short-term opportunities than indices. Yeah, I would also agree with that, I think, Sluggy. It feels like everyone is expecting the previous resistance retest, but we might not get it. Well, yeah, we might not. That's just, that's the markets, that's trading. So yeah, that's again, that's just part of the job. The amount of times I've sat here on stream and we've looked at, hypothetically very, very good setups, or could even say perfect setups, and they just don't do anything, or they'll miss my entry by a couple of pips and I missed the whole trade. In fact, Sluggy will remember I had that problem on, I think it was euro pound earlier this year, where it missed my entry by, I think it was like 1 pip, and I missed a really good trade. But again, that's just the job. We can't unfortunately catch everything. So pound dollar, excuse me, pound dollar is looking interesting, but I'll be honest, I don't want to be involved in pound dollar. As we looked at earlier in the stream, or when I first came on, I suppose the relative strength between the UK and the US is favorable for buyers, but I would say both currencies are fundamentally weak. So I wouldn't really want to trade it. My core sort of philosophy really is, you find a strong currency and a weak currency, you trade them against each other. It's not, I don't like to find 2 weak currencies and just find whichever is not quite as weak, which is the situation, in my opinion, with the US and the UK right now. So if we look at the US heat map, it's only getting 18.8, 18.18. So yeah, really not good. I think this actually might be the worst situation I've seen the dollar in on the edge finder. I've had the edge finder since 2022. It's been a long, many years at this point I've had the edge finder. And I think this might be the most red I've ever seen on one page, which is kind of crazy. Anyway, moving on. The UK is at 33. So neither of them are really interesting to me to be a buyer of. So I don't want to buy the pound because it's weak. I don't want to buy the dollar because it's weak. I don't want to buy the pound versus the dollar. I don't want to buy the pound versus the dollar. So yeah, it's not great. I think that is kind of what is leading into this sort of very horrible sideways price action, to be perfectly honest with you. Because, there's definitely the argument we've broken out this bearish trend line. The moving averages are kind of bullish here. We've created this lower high, this higher low, and maybe a higher high, depending on exactly how you measure them. But I just think it's just not great. It just gives me a bad feeling. I don't really like it. Looks like losing the bond market long end of the curve is rising fast. It is indeed, yeah. Let's just take a quick look. Is it this one? I hate this. Why does, for some reason, my charts don't load properly, like most of the time. There we go. This is what I wanted. So what do we have on here? Is it 2-year and 10-year? Let me add the 30-year as well. So US 30-year. We'll put it on a we'll add a new price scale. So yeah, we are seeing yields just running higher and higher. So yeah, you can see actually basically since the start of this Iran situation, which was roughly around this period here, give or take, might not be a perfect draw in there, but you can see since the start, even throughout the escalations and de-escalations, we've still got yields continuing higher. So basically, the markets are essentially just demanding more return to lend the government money, to keep it super, super simple. So that can be either due to the market's expecting rate hikes. It could also be due to the risk that they want, that they view that they're taking on. It's kind of similar actually to the yen or the Japanese yields. Oh, these ones have disappeared as well. So part of the reason we've got the Japanese yields moving higher isn't just a rate hike thing. It's not just a case of, oh, we want higher rates, because actually I don't think they do. Largely, it's actually driven by the fact that they're taking on a lot of risk by lending to the Japanese government. So they want to be compensated for that risk. So it could be kind of the same thing we're seeing here, mixed with a little bit of a rate hike expectation as well. Sorry guys, bear with me. I'm a bit of a slow reader, so it could take me a minute to catch up. We can't do it. We can't do anything if it misses. It misses. I'm not sure what that means. Hello, I have a gold position in a 4,387. Okay, let me copy that. So you're asking me if you should hold your position or what? I don't know why you would do that, but okay, let's take a look. Oh, I want a fresh chart. There we go. Okay. So this is your entry level. I'll be honest, my friend, this was probably the worst level you could have been a buyer of. I cannot fathom why you would want to be in here. You've literally just bought into one of the biggest resistances in gold that you possibly could have done. So when it comes to the management of the position, legally and morally, I can't tell you what to do. So it's really just down to you. So you need to assess why you bought gold. If you bought gold because gold has moved to the upside, then you should close the trade, in my opinion, because you've got no basis to be in the trade. However, if you're looking at things like the weaker US data, you're looking at the fact that we have been respecting the 4,000 key level, you have a bit more bankroll, you're looking for a DCA position or DCA type of approach where you can afford to buy and just add in small size, then I think it might be more reasonable to hold that type of trade. But again, I cannot answer that for you. That's something you should already know. When you enter a trade, you should always know why you would get out. So this is what I was saying earlier. You've got to look at the risks for a trade and what the catalyst will be. So what's the positive catalyst and the negative catalyst? Negative catalyst would obviously be things like escalations in the Middle East or strong data for the US dollar. That could be a catalyst to get out of your gold position. So is that awareness of the markets and what you're actually doing. I don't mean this in a rude way, by the way. I'm trying to help you. It might come across as condescending, but yeah, that's that. The plan was to wait out the sideways yeah, I don't know how to anticipate news though, and what NES means for what price action on gold. Right. Okay. Yeah, I'll be honest, my friend. Probably worth just closing the trade. The worst thing you can do, especially as a newer trader, which it sounds like you are, is just trade gold, because it's very unforgiving. It's very expensive when it moves against you, and it's a very tricky landscape right now. Gold is not a case of, oh, we've got weak US data, let's buy gold. Gold is very much caught in a push and pull between the yield market or yields, bond market, oil, which is affecting the bond market and yields, the Fed, the US data. So yeah, I mean, it's a tricky landscape. So if you don't understand the landscape we are in, please be careful. And again, I'm not trying to be rude. I'm not trying to condescend you, but I'm just trying to give you my my personal opinions. Lack of faith in central bank and poor fiscal decisions could cause yields to rise also. Yeah, exactly. That's it. Yeah, the risk that they're taking to lend. I'm trying to learn trading more on the 15 minutes to 1 hour time frame. Yeah, okay. So that's the first thing. Get off the 15-minute and 1 hour. You're essentially trying to day trade, which in super efficient markets like gold, Nasdaq, euro dollar, day trading is basically impossible. Now, obviously, anything is possible, but statistically, it's going to fail. It's just day trading is the most difficult way to make money in the market. Swing trading, in my opinion, is the easiest, which is why I do it. And especially for new traders, it gives you more time to react, more time to plan, more time to think, more time to digest and process your emotions as you're trading as well. So yeah, I also look at the high time frames, because if you've been looking at the 15-minute time frame, it probably looks like a decent entry. But on the H4 and the daily, you can very clearly see what's going on here. We've already had the move to the upside. We've now come into a pretty major level of resistance, and we're now seeing 1, 2, 3 wicks to the upside, failure to break higher, another retest, and another failure to break higher. So yeah, it's all these little things that you just need to think about. Well, actually, they're not little things. They're very important things. Do I have an open position on gold? I do, yes. So I am long right here. So I've got a long position down here at 4,000 and another one at 4,060. And then I'm also looking to get into another position around here. This isn't active, this trade here. This is a trade I'm waiting to get into on the pullback. How's it going, James? How's London treating you? I was there not long ago. Love the place. Yeah, good one. I appreciate you asking. London's good. I like it down here. Yeah, I used to live here a few years ago. I've got to say, though, it's a lot more expensive than I remember. But yeah, it's good. What asset would I recommend? None. Yeah, as Sluggy said, there isn't just an asset. So this is another sort of trap question. What you will often see on YouTube and Twitter, the best market to trade for a new trader, or the best market for SMC or whatever it may be. It doesn't exist. It's a selling point. It's a marketing tactic. The markets are essentially all the same. They move because someone's buying or selling, and that's it. So, there is a very watered down answer. Don't trade penny stocks. Don't trade exotics, really. So, yeah, I mean, you stick to the majors, and keep it simple. But in terms of individual assets, there isn't one. It's not like you've got a market that, hold on. It's not like there is a market where you can say, okay, go and trade this one because every pullback is 50% and every trade you can make 1 to 2. If that existed, everyone would be using it. Everyone would be in there, and then it would completely fall apart. It wouldn't work anymore. So this doesn't exist. But then again, there's also no markets that do stuff like this. So do you see what I'm saying? There's no markets that move back to front. So they're all the same in theory. Started drinking wine again. I actually haven't had wine in a long time, Gareth. I've got a couple of IPAs in the fridge down here that I'll probably pop open after this stream. How can we find out the correlation between oil, bonds, USD, and gold? Well, you'd have to look at the impact. It's all really cause and effect. So I'll tell you what, I've got 10 minutes left. Let me actually try and break this down properly for you then. Let's do this in a bit more of a structured, educated way. Let me get a fresh chart just so everything's super clear. What broker do we want to use? This is Black Bull. Let's clear the indicators. Let's get set up or professional. Let's add the US. Let's just go 2 year for now. Well, so we've got the 2-year yield. We'll also add the US 10-year yield. We will also add the US 30-year yield. Oh, wait, hold on. US 30-year. And then we will also add the DXY as a new price scale. Right. So what can we see here? This is a bit difficult to see. How can I make this a bit more clear? I suppose you're going to have to use your eyes. Maybe we could change the candlesticks to an area chart. Nope, that's not any better. Okay, we'll stick with candlesticks. You're going to have to try and figure this out with me. So what we can see, overall, oil here moves higher. Why did oil move higher? Well, we had escalations in the Middle East. What does that mean? Well, the US, Iran, Israel, they all had a problem. Well, US and Israel had a problem with Iran. So they went and decided to go and attack Iran. Of course, super simplified. But then Iran responded, basically closing the Straits of Hormuz. And what is the Straits of Hormuz? Well, it's essentially a huge, huge part of the oil flows globally. So when that closes, oil supply depletes massively. So we've got, let's say this is the strait. This is where all the boats come across, all the tankers. So if this then becomes closed, all of these boats that would normally be supplying oil globally cannot do anything. They can't go past. They're either going to have massive fines, insurance prices go up for those tankers, or they might just get shot. It's not a good situation. So this means there is no oil coming around the world, or well, significantly less than there was. So this means everywhere that is using oil has to rely on the reserves. So when they're relying on reserves, there's no supply. That means demand is increasing. So prices also go up. So when prices are going up, that means inflation can also go up. And this is how we can then see yields going up. And this is why we, in turn, saw the Federal Reserve and other central banks turning more hawkish because they wanted to deal with inflation. So in that case, this is what then drives the dollar up and other currencies as well. Not every currency, they all react differently in specific ways, but you asked for the dollar, so that's what we're talking about. Now, again, I know this is actually quite hard to see. I probably put a bit too much on the chart at once. Let me try and clear this up a little bit. How do I do that? Where's the thing? Is it this? No? Title. There you go. Okay, that's what I wanted. So let's get rid of the yields for now. So then you can see this is oil, which is the candlesticks, versus the dollar, which is the light blue line. So we can see how they are pretty correlated, not entirely. So we can see here, oil's coming up, dollars up, oil's up, dollars up. Again, it's not a perfect one-to-one thing, but you can see the general gist of it here. And then again, if we overlaid all the yields, so we put the 2-year on, you can see basically what I just said, all in tandem and playing its role. Now, that wasn't a super economic view of it, but hopefully that was sort of the framework that you wanted, because that is kind of just how it goes. And then obviously the inverse of that. So if oil's coming down and the Strait of Hormuz is reopening, then we would see the reverse. It's like, okay, we're starting to get oil flows coming back. Although a little bit of a caveat there, it's not going to be a case of Strait of Hormuz opens, everyone's got oil again, because it takes a long time for the tankers to actually get to the locations. But then, yeah, we could over time see those inflation expectations coming lower, yields lower, central banks less hawkish, so on and so on. Fibonacci settings. So this is my settings. Let me just use the YouTube chat for a second while I'll leave this here. James, are you excited for the Premier League? No, I'm not. I don't like football. I'm not really a sports guy. I did watch the World Cup. That was very disappointing, but no, I don't find any enjoyment in just watching people do things. It's like I don't watch people that play games on YouTube. I don't really watch streamers. I don't do any of that stuff. I don't like watching other people do things. Like, I'd rather just do it for myself. Like, I like playing football. I've got no interest in watching it though. What do you think of EuroCAD longs? So it's an interesting question. I don't really think I've got anything for EuroCAD. Let's just do, I've got 5 minutes left. Let's just do another quick check. Do we have EuroCAD here? Actually, you know what would be easier? I'll just look at the scorecard. So it's -3. So yeah, there is no reading here that's making me excited. Is a neutral reading. So let's have a look at the chart and see if we can find anything. I also want my indicators back. Get rid of the RSI for now. There we go. We'll also get rid of the 100. There we go. So yeah, I mean, actually, this shows sort of the power of the edge finder. Code delete for a discount, by the way. The edge finder is neutral. We've got no real reading. It's -3. This market isn't doing really anything at all. I suppose you could make the argument slight uptrend, but there's no real direction. There's nothing I can do here. I can't draw a fib. I can't do anything here. So it puts me in a position really of I would draw, I suppose, some sort of trend line here just to keep an eye on that. Mark up these resistances, and then it's more just a case of waiting to see what the edge finder prints. If it flips bullish, maybe we could look for longs if we start defining a bit more of an uptrend like what we had over in this period. You know, wait for a break of these highs, retest continuation, flip to the moving averages. Maybe then we could look to be buyers. If we end up breaking lower, clearing these lows, having some sort of retest here and then continuation lower, this could also be quite a nice entry on this retest. This would maybe also be a 50% retracement, depending on exactly where the low is printed. So something, you know, maybe like this. Oops, that was, yeah, like that. So I think this is basically all I've got. So yeah, you know, if we could end up printing lower, or sorry, printing a new lower low, and then retest into the fib that lines up the previous low on the left, and then again that continuation lower. I think that's really all I've got for you, unfortunately. It's just not a market that has that much going on. You're more of a nerd. Yeah, I suppose I'm a bit of a nerd. So you don't look to place trades on immediate retracement on gold. Is that because you don't want to sit idle and have anxiety? No, it's got nothing to do with anxiety. It's just it's just the quality of the trade. It's just something that I noticed with the fib. So something, I just need to find somewhere for an example here. So just take it from this low to this high, and typically works out quite nicely. So something I've noticed when trading the fib, you've got basically two reactions at the fib level. So either you have no reaction at all and we just completely plummet through, and in that case, when you buy here, you're buying into a falling knife essentially. Although you might have the reasons to, you've got no confirmation that we're actually going to respect that fib level and we're going to turn around. So in that case, you're going to go basically straight to stop loss or a drawdown. I don't want that. I just don't see a reason to do that for me personally. So I would quite happily wait for this, you know, H4 candle to close and just show me that buyers have stepped in, sellers have slowed down a little bit, and we've shown at least some respect to the fib level. And that way, it just keeps me a little bit safer. You know, it just makes the position a bit more high quality. As I said earlier, it's not a huge deal. It doesn't mean the trade will or won't work, but it's just something that I like to do. I'm doing good, Young. Thank you very much for asking. How are you doing? I need to sit out this week. Was just scraping the barrel, the barrel of EuroCAD. Yeah, that is definitely a bottom of the barrel idea. You're not a nerd, bro. You're making money. Well, I think nerds do make money. Obviously, not the anime nerds that are good in the basement, but you've got nerds that love building and learning and educating themselves. I wouldn't mind being in that category. Although I'm not that intelligent, so I might just be, yeah, the dumb nerd. But either way, it's all cool. Drippy, yeah, I know. Again, I do apologize. I'm doing the best I can with the setup I've got at the moment while I'm on the road. It makes sense. I'm on a fresh account trying to push my account to 2K, so I'm free balling on the retracement. Thanks for responding. No problem at all. That's what I'm here for. You don't want to miss the wicks. I don't care about. I'm not interested in perfect entries or anything like that. Anyway, ladies and gentlemen, I think we have Alan Perez coming to take over the show. I could be wrong. We've actually got a new guest on the show at some point. I've not checked the schedule. I'm a bit out of touch, but there is a new guest. I think it might be the first lady we've got. Is it the first lady? I think I just seen Nick in the chat. It might be. I don't want to be disrespectful. I don't want to get that wrong. But yeah, we've got a new guest at some point coming on the show. So that's cool. I think she's already done one. Guys, anyway, I'm rambling. So guys, have a fantastic rest of your days. I'll see you all tomorrow. Stay safe. Don't get margin called. And yeah, don't go anywhere. Alan's coming on next.
Hey traders, don't go anywhere. The show will be right back. I just wanted to tell you about today's sponsor, that is 8cap. 8cap is currently offering traders outside of the United States a huge welcome bonus when you create a new account using the link that is being dropped in the live stream chat or in the description down below. When you create a new account using our referral link, they'll give you a 20% deposit bonus to your new trading account. For traders who prefer trading on a brokerage rather than a prop firm, this is a great option in which you get a nice little boost to your new trading account. But I do also want to disclaim that terms and conditions do apply to this, so please see the full details using the link that's just been dropped in the live stream chat. Alternatively, you can scan the QR code that you see on your screen right now if you're watching from a desktop or a TV. 8cap has several regulations worldwide and is a very well-known CFD and Forex brokerage. So check out 8cap if you're interested in switching over and taking advantage of this really generous welcome bonus they are offering our subscribers now. As always with any sponsor, please do your due diligence to make sure that this is in fact the right brokerage for you and your trading style as well as your own risk tolerances. Thanks to 8cap for sponsoring today's content. Now back to the show.
Good morning, everyone. Good evening, good afternoon. As the advertisement said, if you guys are looking to switch brokerages, ACAP is offering a 20% welcome bonus for a limited time. So go ahead and check that out. Very, very cool what they got going on. Everyone besides the US. So free game for everyone out there. Yeah, let's see what we got going on here. Shout out James. Yeah, shout out James for being out live streaming while on vacation. That's real dedication. Oh, he's not on vacation. He's working still, but still, he's on the go. To live stream on the go, that's respect, man. So awesome segment there as always, James. All right, let's go ahead and see what's going on here. Nothing much. Actually, you know what? Nasdaq is down 1%. Why could that be? Let's see. Oil's lower. Yields are in the green. Maybe that's what it is. We have a firmer dollar here slightly. I'm very interested to see what happens on DXY. Actually, we are at an inflection point. This is a decision point for me personally. With DXY, let me show you. If you have continued downside on the horizon, you would need to see a break of this level right here, the 61.8 and the 200-day moving average. But if you don't, then you start to see DXY maybe start to bottom out here, catch a bid at the 61 and the 200-day. And drift higher. So that's like the big question. Right now, I'm seeing bearish US fundamentals, a net bearish outcome. And so that's why I think that the path of least resistance maybe could be to the downside. But again, you still need to see those technical readings break down for that to get confirmed. Now, you also do have meeting minutes tomorrow, which we're going to be streaming that. So for anyone that's new to the stream, we're going to be streaming the meeting minutes. So that's tomorrow. Will that affect the change? Maybe not. I don't think so. Unless there's like huge divergence between the Fed members or anything like that. But I think that the trend continues to the downside, me personally. So yeah, that's what I'm looking for. And then beyond that, you have on the US side of things, you have next week, you have next week. Let's go ahead and filter like this. You do have core PCE. You have GDP and Jackson Hole. Jackson Hole is next week as well, which is going to be a big one. So we'll see. We'll see what happens. But I think that the path of least resistance for DXY is just to the downside. So that's how I'm positioned right now. I'm going to stick with that unless something changes. And then if we go to the top setups page on the Edge Finder, let's see if anything has changed on that front. We should still see dollar weakness, metals bullish. Let's remove the neutral bias just to make it easy on the eyes. Yeah, so still in line with us. So we have gold very bullish, pound dollar bullish, silver's bullish. Euro dollar's bullish, Aussie dollar's bullish. I want to look at Aussie dollar too in a second because I want to participate. I just haven't had any pullback opportunities, and I'm swing trading, so I don't want to be intraday or like I want to wait for a good nice pullback. Dollar yen is bullish. That's interesting. I actually want to go long dollar yen, which is kind of weird because everything else I would like, USD CHF I'm short, euro dollar I'm long. But dollar yen I want to be long. And because of the intervention, you had a sizable, meaningful discount opportunity that I didn't take advantage of. So for me, I want another pullback opportunity. Maybe 158 is the new level, like the max I'll get out of this. We'll see. So we are going to be tapping into 160 pretty soon there. Maybe you could have a break retest type situation with UJ, and then we get another leg lower. If we do get another leg lower, I want to be a buyer of it, especially too if you have DXY finding some short-term support here on the 61.8 and the 200-day moving average. So this could be a hedge for my dollar short dollar short exposure. And then, over the long term, I do think that maybe, I don't know, 6-7 months down the line, we probably find ourselves back at 162 or 163. So if I can just capture some of that appreciation plus positive swap along the way, to me, that's a win. So that's what I'm looking to do with dollar yen. And maybe I just take a dollar cost average approach too, like where I buy 158 right here. If I get the opportunity with a small size, that way, if I do go and draw down for about 200-300 pips, I can still get like another entry at 155 or 153. And just start accumulating there, and then I can just improve my cost basis. That would be ideal for me with dollar yen. So that's on my radar there. But I don't want to just blindly buy here at this level here. I'm going to try to wait for some kind of a pullback of some sort. So that's what I'm going to be looking for. Let me just put a fib here too, as what that could look like. So assuming there's a kind of rebound at 160. Yeah, the 38.2 lines up with the 30 or the 200-day moving average. So I like that. I'll wait for that. I'm not going to chase it. If it happens, it happens. If not, it is what it is. But I do like dollar yen to the upside. What else do I like to the upside? Aussie dollar. I do like Aussie dollar too. Let's see here. No pullback though, so I just can't do it. I just have to let this thing run, right? Like I'm not gonna chase price. There has been no pullback. It's just a steady move higher. So we'll see what happens there, but I'm not gonna chase it. I will say that whenever this was happening with Aussie dollar here, you had like this drift higher, right? You did get like a quick pullback that happened within the span of a couple days. So I'm just gonna hope that happens. If it does happen, fantastic. If not, it is what it is. But I do like this to the long side. Let's see what else I can play. Euro pound bearish. That actually does sound interesting. Let's see. Okay. Euro pound bearish. Nah. You know what? I'm kind of just like not interested in currency markets too much right now, too, if I'm being honest with you guys. Like I'm going through it top down, but I'm really not the most interested. Bitcoin's bearish. You guys know how I feel about that. Oil bearish. I like the technical setup on oil, but again, there's risk to the upside. So, like looking at this chart here, I love this from a technical perspective. Like this was previous support, now turned resistance, it seems like, right? So this was support. You caught it to the upside here many times. Now you have leg lower, pulled back into this area here, leg lower, another pullback into this area. It likely holds to the downside. So from a technical perspective, it looks so good. You also have this bearish trend line that has been holding up quite nicely there. So we're tapping into that. So you have support turn resistance at this horizontal level. And then you also have a bearish trend line right here, right? So that looks really good. And then you have a potential to like at least target the 200-day. But with oil, it's trading on and it's very vulnerable to these headlines, which you can't predict. So like I think there's lots of risk potential to the upside. So it makes it hard to trade this. Now, could you do something like this where you go, let's say short, stop below this previous high over here, right? And then you have a take profit to like the 200-day, for example. That doesn't look too good. And then the problem too is, all right, if you want to make the risk to reward ratio better, you would have to target maybe somewhere over here where we got to in the past, like these pre-war levels here on my left. But then that's a stretch, right? Do we pop before we get there? Very reasonable. And I think that's very likely too. So with oil, I like to play. I just feel like I would rather buy. Here's my thoughts with oil right now. And maybe I'm wrong. I would rather buy here at an extreme discount than sell here at this really solid technical environment that we're seeing with oil. That's just me though. So I'm gonna hesitate on that, but I'll be watching this chart. But you guys tell me, like, if you guys are watching oil, are you guys still putting emphasis on the potential randomness volatility that we see due to the headlines or not? Me, I still think it's very much affecting this market. Alan, are you still in EU? Yes, I'm still in EU. Let's go to EU right here. So we're getting close to that level, that take profit level. I'm just going to let it do its thing. It's break even, so it really doesn't affect me much. We got pretty close to it, so we'll see if we continue grinding higher. I think so. And then I'll just take profits here at the 200, and then we'll go from there. Same thing with dollar Swiss. We actually had we have a pretty strong day here for dollar Swiss, but I did like this that I saw here. So we broke this technical upward trend line here. We're testing into this area now, but we had a leg lower, pullback. We'll see if it holds and ideally continue it lower, but it is in a little bit of drawdown right now. And I have my stops above this level here, this technical structure. So let me zoom out for you guys so you can see it. And this is my second attempt, by the way, guys, at dollar Swiss. So I had an attempt earlier, and it took me out right over here, right when we had this pop. So just so you guys know, this is my second attempt with dollar Swiss. It's currently in drawdown, and this is the level that I'm looking at. So we'll go back down to a 4-hour just to make it clean. You have this solid technical level here of resistance. I like it. You had a break too of this upper trend line here. You have the edge finder being bearish on it. You have a net bearish outlook on US fundamentals as well. And if you go to a weekly time frame, let me show you this level here. This is just one big solid level 2 of resistance. So we are also within that level 2. So I do like that. Why am I not able to switch it to template? There it is, resistance. So right there. So we have this big level here of resistance here on the weekly time frame. You could also see it on the daily time frame as well, depending on how you structure it. But you do have it here. It rejected it 1, 2, and then a couple times over here. So I like the level. It's just more a matter of timing, which is what I'm trying to capture here. So you're a dollar long, dollar Swiss short, and I also have still gold long, which it's pulling back here. I did trail my stop here to break even, which is right lined up with this level of support. So if this level of support holds from here, which we've been kind of trading sideways now, but if this level of support holds, so we had a breakout, this level of support holds, then I continue it higher. And then if it breaks this level, then I would trail my stop all the way to here. If it doesn't hold, if this level of support breaks, fine, I get out for break even. And then I'll just look for a better pullback opportunity, 4,200, 4,120. We kind of know our levels already. We've been watching this for a while. So for anyone new here, pullback opportunities on gold that I'm looking for is going to be the 38.2 right over here, the 50 or the 61.8. I think this level here between the 50 and the 61.8 looks quite well, to be honest with you guys. Like if you just look left, this looks like a solid level here that was previous resistance that could possibly turn into support. So I'll be looking at this level for a retracement opportunity if we do get it. But if not, if it continues trending higher, then I'll just continue to ride the trade for as long as it gives. And then for edge finder, it's still bullish there. Let me look at the sentiment readings on gold too. So retail sentiment, I just want to see where it's at still, which this could be the catalyst that takes us lower on gold in the short term. So gold here, we have some very, very crowded bullish retail sentiment to the long side. Let's go to net options volume and see what that looks like for gold as well. It's starting to cool off a little bit here too. So we'll see what that looks like. But it's no extreme readings in either direction. And it's not really getting that much of a crazy put to call ratio reading either. So I don't know. It's we'll see. I think it's very possible though that gold just continues up. You know, especially if you have oil prices lower, the dollar continues to soften up. I think that gold can very much well just continue to just start to drift higher. But the real obstacle here would be the 200-day moving average. So that's what I'm looking for. Let's see. What do you think about USD CAD might be a sell? Well, we had strong, strong inflation yesterday for Canada. And then you also had a strong labor report for Canada. So when we had the bad NFP report, Canada that same day and same time had a very strong labor market reading there too. So that was benefiting dollar CAD to the downside. You also had elevated inflation yesterday for Canada as well. So we'll see, right? So let me frame this for you for dollar CAD because it could be an opportunity. With DXY, you know that I'm waiting for this. I'm waiting for the 61.8 level to break to the downside and this 200-day moving average. Like to me, this is real support, genuine support for dollar. So if buyers want to step in here and take it higher, they definitely can right now. Same thing with dollar CAD. I would like to see this 200-day moving average break down, right? So we're at the 200-day. We broke this level of resistance, right? This resistance turn support. So we broke that. Now it's just a matter of waiting for these technicals to start to break down even further right here. So I would need to see DXY lead with that first, right? So similar to how you could trade momentum with single stocks, like you want to see the index move and then stocks would follow. Same thing with this, right? I want to see DXY break down first, and then I'll see the momentum go through with dollar CAD. So that's what I'm waiting for. But it is a very real setup. Like Canada's, macro has been improving significantly relative to the US. So it is a really cool trade. Now, to answer your question, will I short this? Probably not, just because I'm already exposed dollar short with euro dollar long and dollar Swiss short. So I don't want to increase my exposure there. And I'm also long gold as well. So I'm pretty much correlated 100% short dollar. So I wouldn't go ahead and buy this. But what I will say is that if you do get a meaningful pullback, maybe to, I don't know, 1.3700 or even below, then I would be a buyer for the longer term. But that's the kind of the thing with dollar CAD. And also too, if you just look at the chart, it's pretty extended. Not to say that it can't go down even further, but it's kind of doing its thing already. I would have rather shorted somewhere up here, and I just didn't. So it is what it is. Same thing with Aussie dollar, right? I want to be a buyer of Aussie dollar. I like the hawkish RBA, and I like the kind of shift that you're seeing from the Fed from 2.5 rate hikes to now you're only getting one. So I like that divergence there, but again, just no pullback opportunities. So just kind of have to sit on the sidelines for that one. And I'm pretty happy with my current position. So it's not like I need to increase my exposure. I'm pretty okay with it. Right now, you have just a different hot topic, which is the precious metals, right? Like that's moving better. It's moving cleaner than FX too. So I'm not too eager to jump in. Alan, speaking of gold, if it goes to 4,200 or so, do you think that would be an opportunity for a swing trade? 4,200 on gold. Let's see. Where's that at? Yeah, for sure. I like this level a lot. So this was you could call it previous breakout level. So this would be like a breakout level, previous resistance here, turn support. If you do get the pullback into that level, I know it may seem scary if you were to see gold plummet to 4,200, right? Like if you look at this chart here and you see like a big quick drop here, that could be like, whoa, what are we doing, right? But it just depends on what the catalyst is. Is it, tensions in Iran escalating, so you have oil higher, you have yields higher, you have inflation fears back on the table, and maybe you have a CME Fed watch shifting more hawkish? If that's the catalyst that brings gold lower, then that questions or clouds the idea to the upside, right? Because that's kind of the same environment that we saw here, right? The whole reason why we saw oil or gold lower was because you had inflation fears. But if you have the catalyst that takes you to 4,200 on gold, which is maybe just crowded sentiment getting squeezed out, right? You have overcrowded positioning up here. Maybe there's something that takes us lower there that doesn't really disrupt the idea, the macro underneath it. Then I still like gold at 4,200. So it really just depends what brings us here to go ahead and allow you to go ahead and enter the trade up to the long side. So yeah, it's really contingent on that. What are your moving average settings? Yeah, so you guys had questions on that. Marco and I discussed it. So I have a simple moving average, and Marco uses an exponential. And what I do here is I just kind of anchor the 200-day, no matter the time frame that I'm on. So right now I have the daily 200-day moving average. If I go to a 1 hour chart, I still see the 200-day moving average on a daily time frame. So that's why it may seem odd, but these are my settings for those asking. Input length 200 on the close, and then I just have SMA type length 20, and then the time frame. This is the real kicker right here. I just have it on the 1 day, and that's it. So you could do it on chart. I think the default is chart, right? So if you go to chart, if you drop down to a 4 hour, it'll be the 200 on the 4 hour, whatever. But I just use it like that. Let's see. What's your trigger for entry on the entry time frame? I think you're asking what time frame do I use to execute? I use the daily for the most part, the 4 hour too. Nothing really below that. I really don't care to get a perfect entry. Like when I'm trading currencies and stuff like that, or anything really, my stop loss is pretty wide. Like me, I just want to enter at a decent level, right? I don't want to be too precise. I enter at a decent level and I give it room to do its thing. And for example, with gold, let me go. Let me kind of show you through my thought process when I initially bought gold around here. So we had, let me see, give me a second. Let me just redraw the chart here. Very, very simple. Okay. Because with gold, I know there's a lot of intraday scalpers out there. So let me just show you what I'm doing. Maybe you like it. Maybe it resonates with you and maybe helps you out a little bit. So with gold, right, we had this going on, right? This is the exact start of the war in the Middle East, right? You had gold trend lower here off of the inflation fears, all that good stuff. And we were on a very solid level that I thought was support, right? You saw gold range bounding right here. So clearly it didn't break this level to the downside. So I thought, okay, this is potentially a solid floor. We had this bearish trend line here that I drew out that we broke out of too. And then you also had the edge finder showing a bullish reading on gold. So I thought, okay, well, you know what? I'm going to take a stab gold right here long, and I'm going to put my stop way down here. Now, some people were like, dude, that's a really wide stop loss. And me, I'm just like, well, it is what it is, right? The stop loss needs to be what it needs to be. And for me, the stop loss being right here was, well, if I get stopped out, that means the trend, like this level of support here that I thought was strong, is not as strong as I once thought it was. So that's kind of how I do it, right? So the stop needs to be where it needs to be. Because you have wider stops, consequentially, you have to maybe lower down your risk size, right? So that's kind of the trade-off there. If you have if you're trying to risk 1% on a trade, for example, and you have a very tight stop, well, you can increase your risk size. If you want to risk that same 1%, but your stop loss is going to be a lot bigger, well, you just have to dial it down a little bit. And to me, that trade-off is worth it. And for me, that allows me to let the trade do what it needs to do, right? Gold was chopping right here, right? So I was looking at it, I was frustrated, but I wasn't like married to the charts, looking at it every second, looking at the P&L. It was just doing its thing right now. Just let it do its thing, let it breathe, and let it work out. So that's kind of how I look at entry points. Is like I just want to get in a general nice area rather than be super precise to the tech, just because I just want to make that decision a lot simple. How did you end up being a swing trader? I just think from a retail standpoint, that's probably the easiest way, which trading is not easy, but it's the easiest way to extract value. Like when you're intraday or scalping on for example, gold or equities or whatever, you're going up against algorithms, you're going against a lot of forces that you may not even think of, right? Especially in currencies. Like for me, currencies is really, really hard to scalp because one, it's decentralized, right? So in a world of scalping where you need to be precise to the pip, to the tick, it's decentralized. So what you see on this chart here may be way different from what you see on your chart there. Not by a lot, but again, in scalping world, every tick matters, every pip matters, right? So like for me, swing trading allows me to see exactly what everyone else is seeing. When you go on Bloomberg or CNBC, they are all talking about the labor market. They're talking about inflation. They're talking about the same variables that we look at. No one's talking about my high frequency trading algorithm did this today and whatever. It just doesn't work like that. So for me, if you want to have as much as an advantage as you can on the retail side of things, then I just prefer macro swing trading. I think it's very, very clean. So yeah. No risk, no Ferrari. No risk, no Bugatti, you guys are saying. Well, if you're trying to risk it for the Ferrari or the Bugatti, what happens if you blow up along the way on that? And then you have no car at all. Then you're walking. Yep. All right, let's see. Any markups that you guys want me to go over? I'll go ahead and go through them very quickly here before. Yeah, then you're walking. Then you're sweating, man. Especially if you're down here in Texas, you do not want to walk. Okay, it's not walkable friendly, and it's hot, so you don't want to be in that situation. Risk it for the biscuit. All right, let's see. What are equities doing? Strong. We're red today, but we're strong. You have a Fed that's tilting from hawkish to maybe neutral, so that's helping. The Nasdaq tried to play catch up here. We'll see. If we get a retest to here, maybe. But again, you're buying at a premium in an environment where we never really got the big pullback that I was looking for, that big correction. So that makes me hesitate a little bit. So yeah, Nasdaq, I'm just gonna stay away from that. Bitcoin, what is Bitcoin doing? Nothing. It's, you know what? It's looking a lot closer to that 200-day moving average though. So again, you guys know this. If I tap into that, I'm shorting it. If not, it is what it is. But Bitcoin has been very, very quiet lately. I don't know. Like my question is this bearish outlook on Bitcoin getting exhausted, or is it just rounding up for another leg lower? I'm gonna take the stab at it lower though. No risk, no lower. Brianna, you guys are funny. What time is Nick and Marilee coming on? They are coming in about 3 minutes from now. So you guys have me for a little bit longer. Again, if you guys have any chart markups or anything, feel free to let me know. If not, I'll pass it over to them. Bitcoin is going nowhere. Yeah, man. It's been a tough time for the crypto crowd, I would say. This is a really great example of, attention rotates, and right now the attention is not in Bitcoin. You had first going into AI initially, and now you're having more of a shift into the metals. Like attention rotates. But yeah, this chart is doing nothing. Or am I using SMA instead of EMA? Just because I'm boring. That's like the OG one. What is your Kiwi fundamental analysis? Okay, let's talk about Kiwi real quick, and then I'll pass it off. So let's go to. Actually, let me look at this real quick. There was kind of a back and forth as far as making the argument, is Aussie more hawkish than Kiwi or vice versa? Let me go to their actual economic data. I need to see their inflation. And I need to see, so Aussie's at 3.8 and Kiwi's at 4.1. Wow. That's a tick higher. And then their employment number. Let's see. Aussie. What is that? 4.4. Is Kiwi not on here? Am I not? Oh, there it is. Ooh. I would say probably Aussie. Yeah, because they're struggling there with their employment in New Zealand. This is a good breakout trade too, and I think Edgefinder is also bullish on that as well. I'm running out of time, guys, so I'm not gonna exhaust myself, but I will be back here for a second segment. So maybe I will reserve that for when I come back on. So give me a second. But Aussie basket against Aussie Kiwi. Oh yeah, it's getting a bullish ring of 4. Okay, we'll talk about that when I get back. So give me 1 second, guys. I'm gonna pass the show over to Nick and Merrily. So you guys are in great hands. See you in a second. Bye-bye.
If you're looking to get funded and want to save big on prop firms, check out our website, A1Trading.com. On our website, we have a massive catalog of different sponsors and prop firms that are offering really competitive prices to our live stream viewers. On the screen right now, you see a QR code. If you scan that, it'll take you to this page that I'm looking at to scan all the different offers. You can also filter by 1-step and 2-step accounts. You can also look at futures, Forex and CFD prop firms, and even prop firms offering stocks. You can also select your preferred prop firm challenge size and check out our menu at the top for tons of different prop firm perks and giveaways. For example, every Monday we do a weekly prop firm giveaway that you can sign up and add your name into the hat for free. Additionally, we have prop firm reviews for notable firms, and we even have a side-by-side comparison tool where you can compare 2 firms head-to-head. Save big and find the right prop firm for you over on our website, www.a1trading.com. Thanks to our various sponsors who make this show possible. Now back to the content. All right, we are back with another session with Merrily. Hi, Merrily. How are you?
Hello, good morning. How are you?
Good. Round 2. We can do more macro charts this morning here. So thank you for coming back. Since we've last spoke, we've had some interesting stuff take place in the market. We have yields flying high. I feel like that's the big story this week. You have the 10-year yield moving higher, the 30-year yield moving higher. And meanwhile, maybe just a little bit of softness in stocks themselves. Anything you're watching today? What's on the radar?
Yeah, I was watching the 30-year yesterday. I actually ended up getting it because I tend to trade more equities, but I did get, I was looking at the TBT and TBF, so essentially the 20-year trust, I think is what it's called, but tracking that. And it was a short one, so it was inverse, but I got into that just because, like, I mean, the long end is just, there's no reason for it to slow down, unfortunately. I mean, obviously it can chop to highs for a little bit, but you know, if we think about, you know, kind of what we talked about last week with the CapEx and the growth, it's like, that's not slowing down. So it's not surprising that it's moving up like that. The part that would be concerning is the kind of the momentum and speed. If it does it so quickly and so aggressively that it causes some sort of volatility snap, and that, like, you know, I wouldn't say crashes things, but definitely like causes some sort of a flush. That's more so my like current concern. I think we chatted a little bit about that last time, but yeah, that's still on my radar very much.
Yeah, it's really interesting because yields are flying high, and I listened to someone break down and TBT, for those who caught that, TBT is it's a leveraged short bonds ETF, which is obviously doing really well here with yields moving higher. Bond prices, maybe TLT is a good proxy for that, continue to trend lower. And so the inverse ETF trending higher. TLT actually reached its lowest point. I know I've seen this floated around everywhere. It's reaching its like lowest point in many, many years. I think this is dividends included. I think that's why. Yeah, there it is. So there's without dividends, you can see it's trading at just about its lowest point since inception, which is really crazy here, going back from 2002. And again, it makes sense when you look at the 30-year, for example. It's at its highest level since 2007, before the great financial crisis. And so this I think, is finally starting to get the attention of equity investors. But one thing I listened to this morning that you might find interesting is that part of the reason that some people are saying that yields are moving higher beyond just what you might expect, you know, we're thinking Oil prices have been generally higher. Inflation's been trending up. There's also this CapEx spending story that we were chatting about last time around that is still really relevant here, which is this concept of now investors in the bond market have a lot of options from the sense that they can actually invest in the hyperscalers. They can buy debt from them and get paid pretty nicely there, which is actually creating upward pressure on yields as well. You have to think if like the whole bond community can now invest and get pretty solid yield from really well-off, wealthy companies. If that yield that they're offering is really competitive, it kind of lifts the boat lifts all boats, right? Because you have now yields internationally are trending higher. I think it is a combination of inflation, but also the hyperscalers there's a massive amount of money pouring into the AI trade and getting decent yield in the bonds market as well. So it's an interesting time. You have a lot of pressures that are upward on the other. Obviously, the other big one that we keep talking about is the Japanese situation where, they have this never-ending skyrocketing 2-year yield and 10-year yield and 30-year yield. So I think the bond market, someone commented on my video yesterday, they said, when the music stops in the bond market, everyone will pay attention because it is really a massive market and something I think people should pay attention to. But we'll see. What are your thoughts on that CapEx story? Do you think that's weighing in on the yields world as well?
Yeah, I mean, I hadn't put too much thought into it, but when you were saying that, I remember seeing, big companies issuing, debt in countries like Canada and Europe and all these other countries, not just the US, but they're issuing their own private debt, right? And so it's like that definitely would play a part. I mean, maybe not like the structural part of it, but definitely, an influencing piece of it, I think. I know the yen, we talked about that too, but the funding of the CapEx is interesting because we're talking about like, where do you think like the majority, and I was watching the video kind of that you mentioned yesterday about, the intervention with Percent. And it's like, I just thought like that was such a funny, like interesting, like seeing that picture floated around of his desk and he wrote out Japanese yen and then JPY.
Yeah,
but it's
totally
like,
not on purpose.
Definitely was not, trying to hide that at all.
Yeah.
But it's like, it makes sense because it's like, there's so many moving parts, I feel like, in that intervention. And part of it, in my opinion, is where is the funding for the CapEx largely coming from, or at least in part, if not largely coming from? The carry trade, right? And we need that funding to go into these US assets to build this, infrastructure. And then, the yield differentials as well. They don't want, Japan selling the US treasuries because we already have these 30-year and 20-year at, all-time highs. There's so many different facets to it that I just find it so interesting. And I liked that video that you were talking about. I actually skimmed through it. It was really good. And oversupply of bonds too. I was thinking about that as well.
Yeah, rarely do I have a video that I'm like thinking about 3 days after watching it, but that one was good. For the listeners, what we're referencing here is a video by Patrick Boyle. He put out a video. I'm gonna just show it because it was so well done. I'm gonna just keep giving him credit for it. Here it is. It is Patrick Boyle, the insane US-Japan currency bailout. Guys, go watch that video. It is really quality stuff. But one of the things that I thought was really particularly interesting about that is the US government traditionally doesn't get involved in currency intervention, but because of the kind of, maybe, I don't want to sound like doomsday and alarmist, but with TLT doing what it's doing, what Patrick Boyle in that video pointed out that I thought was really good or well put, was that the US bond sort of premium has kind of lost some of its edge simply because US treasuries have been flooded into the market for so many years. And when the supply of something goes up dramatically, the concern is that the demand hence goes down. And so now there's like this less demand for US treasuries. also this worry about giant national debt and inflation, et cetera. And so bonds keep plummeting lower, which is the reason for why yields are moving higher. You have yields. The investors of the world are saying, if we're going to buy US Treasuries, we want more yield to compensate for the added risk that we're going to take due to your massive $40 trillion national debt and rising, and, you know, the inflation that is suspiciously, you know, not going away. So yeah, it's a really interesting story. I do think that here's the thing. We talked about it last time. The difficulty of trying to time any sort of market correction. I personally really don't like to short stocks, hardly ever. It's just such a difficult trade, but waiting for those retracements can sometimes be really rewarding, or maybe rotating out a little bit of tech stocks only. So, tech stocks obviously really disproportionately at risk when you have this sort of thing, because historically, if you actually do a little research on like historically what causes stock markets to crash, way too often it coincides with a sharp rise in interest rates. Like it is very, very much a powerful indicator that the stock market could have some trouble. I don't necessarily think like right now, right here, the stock market's going to crater, but it certainly feels like the higher yields go, the more negative pressure it puts on equities. So Marilee, with that, what are your thoughts? Like, I know we talked a little bit about it last time, but how do you position this? I know you mentioned you have some cash on the sidelines. If you were to deploy cash, like how would you start? Where would you start? And what would you be looking at? Like what types of areas of the market?
Well, I'm very selective at this point. I took a trade actually, which is totally out of my wheelhouse, but I took a trade on Chevron after their earnings.
Okay.
Just because like one, they had their earnings, it was positive. Two, like, you know, it was right around that consolidation area before this recent breakout. Right in there. And they had just had their earnings and they had positive earnings. But even more than like the technical, you know, we had a big push up and then we were consolidating, you know, getting ready to have that next breakout, and we held those lows. The Strait of Hormuz is still shut. Like nothing has changed over there. Right. And that's kind of almost like fallen to the back burner now because of how high the yields are going. And there's other things that are kind of taking the spotlight, I guess, and partially because it's just been going on for so long. But, you know, that's just like a trade that I was like, you know, the theme makes sense. The sector makes sense. The chart makes sense. In those scenarios, I'll take a trade. Right. And I ended up closing it out last night for like 100%. So it wasn't, you know, that's not something I normally do, but if I see a good setup that matches with where the macro is, then I'll take it.
Yeah.
I went long on the inverse of the TLT, but I still really like gold too. I mean, if you think about, so I think it's interesting how the Treasury the Treasury's typical range of how many bills they're issuing versus bonds is typically 15 to 20% of bills relative to the total amount. Recently, it's been up to like 22%. So they're issuing more bills. And if they continue to issue more bonds into the already abundant supply that we have, and I'm not saying they're not going to issue them at all, but if they shift, you know, even more so towards the bill side, right, you're looking at a liquidity impulse. And so if that were to happen, you know, what do we think gold is going to do? Like, it's just going to go higher, you know? And so I really like, and I bought some GDX kind of towards the lows, and I think I bought it in the 30s as well. Oh, so nice. Like kind of as on the way down. So I think I bought it. Let's see, where's my chart? I guess I could probably share mine too.
Yeah. And feel free to share your screen if you'd like to. We can pull it up as well.
Yeah.
GDX has been on fire here recently. I played some short options on it. I sold puts on GDX. I took profits on those, but I'm with you on the gold idea. Any sort of retracement, any sort of pullbacks on gold, I'm a buyer. I really like the 4,200 level quite a bit from a technical basis. You know, that's kind of this broken consolidation zone. If we were to retest in that area, I've been talking about that for a week and a half now. So I'd love to see a little bit of a retracement there. If we get it, I'm probably a buyer. But yeah, I like the macro for gold. I like the national debt concern story for gold. I like it personally. I like it both short term and long term. Long term, I like it. Short term, I think it has some nice momentum. So, or at least some building momentum. So we'll have to see. But you've got your chart here. We could pull that up and see what you've got.
Yeah, it's basically the same one, but yeah, essentially, like, I have the trend line, moving down like this, and then I ended up buying a little bit here, and I initially bought some down here when we had the first kind of deeper pullback. I also would like it to come back. I mean, to that 4,200 level on gold, it's kind of about 80s, low 80s for GDX, but it's so strong at the moment because of everything else that's happening with the macro. It's like I wouldn't be surprised if we had some sort of like headline event or macro catalyst or something that causes a short-term flush, which I would appreciate, because then obviously you're going to get a pretty nice pullback into, a good area. As long as we don't have the carry trade unwinding though, in that scenario, that's really like if carry trade is starting to unwind and vol is spiking out the roof, you know what I mean? And it doesn't normalize. Okay, then like, we'll see what happens at that point. But assuming that, the move index, the volatility doesn't just blow out, then I am very much so interested in, at that point, probably getting GDX calls, to kind of capitalize on that, I don't know, more so.
There's an interesting, I was going to say, there's an interesting dynamic. You're kind of hinting at it too. Like if you have some sort of liquidity margin call event, what's actually kind of interesting is, at least historically speaking, that does also cause gold to go down. Like everything goes down when you have, at the end of the day, it's like if anything has a ticker, people will sell it if they need to raise cash, right? So GDX, gold, doesn't matter what it is in those flush moments, everything gets sold. However, that typically, again, I'm just giving historical basis here for listeners. Typically, gold will sell off with everything else if there's a liquidity event, but then rise back sooner and stronger. So, like that happened big time in 2020. Just as an example, the stock market in 2020 also rebounded pretty quickly, but look how fast gold did, right? So you had this moment where everything sold instantaneously. Like we had a massive margin event in 2020. Gold sold off from peak to trough by 15% or so, bottomed out, and then just reversed higher and kept going. The stock market did too, but not nearly as quickly as gold. So it's kind of an interesting concept. It's like when margin settles out in a really scary headline environment, what's the first thing that people grab for? It's usually gold. Like that makes sense. Like people are like, okay, don't know where to put money, got to put money back into the market. I'm going to throw it into gold. So I think that's an interesting play. I also think that gold is especially attractive given that it's pulled back significantly from its highs, down 29.5%, and still well off its highs. Meanwhile, stocks, if you're buying it right now, you're still just 1.5% off the all-time highs. It's tough.
Yeah. No, the thing I love about macro though is like that scenario we're talking about with gold flushes, right? When you have like a true macro view, it affects, and obviously macro drivers, it affects not only the currency market, but the bond market and also the equities market, right? It affects everything, right? So if that were to happen, the dollar likely would spike really aggressively. And that, in my opinion, would probably give us a scenario where we could short the dollar, right? Because they're going to move it. Like typically, if you're selling everything to get into cash, dollar is going to spike up. And if we know it, obviously we don't know yet, but if the reasoning behind it isn't a vol unwind or, margin globally being called, then you're likely going to see it fade, right? And it's so interesting that I just think back to like a couple of years ago when I knew like nothing about macro and I only knew equities and stuff like that. And I just like, this was like bonds and currencies was just like so out of my frame of reference, but like, fast forwarding to now, I'm like, holy shit, I was missing such a big piece of the picture all the time. I'm just looking at charts over here and it's like, your little charts mean nothing when the macro's against you.
It is actually very humbling. Like what I've found in markets, the Dunning-Kruger effect is so real in trading because at first glance, you think to yourself, you're like, okay, this stuff is pretty easy. I can, I can do charts. Charts are really simple. Like it's going to be, and then you just like slowly, it just grinds you down. You realize, okay, sorry, I messed up my drawing. I'm an absolute dummy. And then slowly you build it back up and it takes a really long time, but eventually you feel like reasonably confident. This is where the macro came in for me, is on the way back up. I was like, okay, I have no idea what the bond market means. I have no idea what currency intervention means or what the dollar strengthening means. But you're right. I always like to think of like, if you're a macro trader, you're an everything trader. You don't trade one thing. You don't like, especially, you might actually execute trades on gold or on GDX or individual equities or whatever you trade. But from a context perspective, you can't just like ignore one piece of the puzzle, right? You've got to kind of like pay attention to some degree all of it. Macro, I think that's why
overwhelming though, as someone new, and you're like, there's so much I don't know, and it's like, and even now, it's like I still know there's so much I don't know, but it's like what I do know, and it's like I guess I'm a super visual learner. Let me see if I can share this actually. And so I create stuff with Claude all the time just to like help me like internalize these topics because they are so complex.
Right.
And let me see, like this is just an example of something I made for my students. I don't know if you can see it.
Yep, we've got it.
I'll see it in a second. Yeah. So it's essentially this like map of like how these things web together. And like if you click into credit spreads, when real rates are, and credit spreads are rising, what does that do to liquidity, equities? How does it impact real rates? And it's just this like constantly kind of like changing bubble of like things and how they're relevant. And obviously, it's not going to be perfect or anything like that, but it's like, I have to see it in order for me to like internalize it.
Yes.
Because audio learning I like it, but it doesn't like get it deep into my brain. And so for things like macro, specifically, like it's a challenging thing, and I think the repetition, so like your show and just talking about it over and over and over really helps a lot. But then when you tie it to like seeing something, it just like makes it so much better.
Well, I mean, first and foremost for listeners, real quick, make sure if you are not already, subscribe to this channel, subscribe to wherever. Also, please check out Marilee. Marilee, do you have Instagram? Do you have any other socials yet? Or you have a website? Is there a way people could find your stuff?
Yeah, as far as like I don't really do much with my YouTube. Just honestly, your channel's a little bit inspiring. I'm like, I should do more like I really appreciate the long form content, right? Because especially with something like macro, it's very hard to do a 30-second reel and explain something in a way that makes sense. So like I'm leaning more and more towards the long form. I do have a Substack, which I put out weekly articles of like what I'm seeing in the markets. I think it's Marilee Cordova. I can give you the link at the end, but yes.
Well, next time what we'll do is we can have your links at the ready and we can share them with everybody. But I would definitely encourage anyone to find you on Instagram. Maybe on the back end, James could at least share your Instagram for now, and then we could get that more shared. But highly recommended, guys. There's a ton of great free content out there. There it is. Thank you, James. So follow Marilee on Instagram if you're interested in doing that, learning more from her. But yeah, I'm the same way. So first of all, I love that tree map, and I'm a huge nerd. I'm a software developer by trade. So anything that like helps to visualize and that's all about what I'm doing. Same concept here. This is
I love that too so much.
Yeah, super visual because I'm the same way. Like if I want to know gold, there is simply too much stuff, like you said, to do it all in your head. So years ago, before AI, we set out on like an adventure of like, okay, I want a dashboard that can visualize all this stuff. So gold has all these different metrics, but each metric impacts individual assets a little bit differently. Like for example, GDP growth being strong, that's good for the dollar, but it's bad for gold. And every asset has like its individual kind of impact chart. So this is sort of our impact scorecard overall, and it automatically kind of visualizes all of that data, pulls it in, the latest data. But yeah, I can definitely, by the way, I can send this to you. I don't think you have a copy of it, but we can send you a copy. You can play around with it. I would love anytime I have somebody who knows a good bit about macroeconomic stuff, share their insights with me. We continuously kind of try and improve this tool. We have traders all around the world using it, and that's kind of the engine. That's the business behind the YouTube channel here is, building tools like this for traders. But I just mapped it out because I think for traders out there, like if you want to implement macro, whether it is a tool like Marilee's, whether it is a tool like ours here at A1 Trading, whether you build something of your own nature that's kept simple, highly, highly recommend that you do that, because when you listen to these streams, these are great for reinforcing ideas and learning concepts and building doing your repetitions. But ultimately, you still, after all said and done, I think need something that kind of helps you to convert the theory into some actionable tool or insight building thing. King of Kings, thank you very much for the $9.99 donation here to the stream. Appreciate you. Says, good morning, Nick and Marilee. This is my first time catching you. Question for both of you, and how long did it take you to understand fundamental analysis enough to make a difference in your trading? Marilee, you want to take that question? So how long before fundamentals started to positively help you?
I would say it was about a year.
Okay.
Maybe a little over. I mean, I'd say give or take a year. Because I really started learning, and again, a lot of it was just repeating the same concepts, just because, I mean, anything in markets is like a new language to someone who's never been in markets. And so you take that even with technical analysis, like there's so much terminology there that you just don't understand. So macro is just the next level of that, in my opinion. And so one, you have to learn the terminology of like, what do these things mean? And like, what is it like? The way that I actually approach the way I teach my students is like, there's 3 levels to learning. One is you have to identify what you're looking at, right? Terminology, things like that. Like, what am I even looking at right now?
Right.
2, you have to apply it. So you have to put like hands-on situational scenarios of like, how do I use this piece of information that I'm learning, right? You could take like, the bond market, for example, or just a bond, right? What does it mean? How is it applied in real life? And then the 3rd level is synthesize. So then you take like the bond plus currency, and now you're synthesizing all these things together. And so I would say the first 2 levels took the longest for me, because once you kind of understand what you're looking at, whether it's a bond or a currency pair, or even like central banking and things like that, once you understand what it is, then you can apply it. Those 2 take the longest because you actually have to get the information like stuck in your brain. But once it's there, it's pretty, I don't want to say easy, but it's relatively straightforward to like piece it all together, I would say.
Yeah, I totally agree. I think, in terms of my experience, it's probably similar. Like I got hooked on fundamental analysis. I remember like what started to happen is every time there would be a big move, naturally, the question for people, myself included, would be, why did that just happen? And once I started asking why, it was highly addictive. Fundamental analysis like completely took over, because I would see a big move in the dollar or something that I was trading. Like you said earlier, like you'd be watching these charts and then something massive happens. And then you're like, what just happened there? And then you actually take some time to dive deep into why that move took place, why that was significant. I remember Brexit, for example, like years and years and years ago, I was like, what in the world? These currency markets are moving like insane amounts. What is going on? And then I would, read into it, and I felt like satisfied understanding more about why that move just took place. And the more I did that, the more I could never look at markets the same. Like once you see it, once you like see a little bit of the truth behind it, you're like, I can't go back to just looking at candlestick charts. I have to understand, what is this market? Like, what am I trading here? Why am I throwing thousands of dollars at this thing and I don't even know what it is I'm trading? Like, that doesn't make any sense. I want to know with context, with reason, why the thing I am trading generally moves higher or moves lower. And if I can actually, I also think that fundamental analysis, like once you get that, it's sort of like, it's the storybook of what's happening in markets. And if you're good at context clues and story reading, the idea is like, you can kind of picture together, like put together the pieces of like what might be coming in the story. That's fundamental analysis is a story. And with context clues from that, you can potentially make predictions or at least be on the right side of the story that's unfolding. So I think it's, to me, I can never, ever look at markets the same. Once you see it, you've seen too much, you are exposed, you have been infected, and you are one of us.
Yeah, and I will actually take that one step further. When you understand that big picture, it becomes so much easier to identify where the mismatches are. Like the mismatch is the opportunity, right? If you know that fundamentally, we'll just take the yen, for example. The yen is structurally weak because the Ministry of Finance just keeps spending so much money and they have upped their spending. And as long as they're doing that, the yen will not structurally, on an actual structural basis, strengthen. And
Right.
so if you know that and you see this intervention happen where it's spiking the yen, you know this is not going to match with the long-term story, and here's an opportunity to go short.
Right.
Like that's those mismatches where, like, if you know the underlying drivers and it's not matching each other, typically there's an opportunity there for you to take advantage of.
Yes, I totally agree. And there's so many endless stories like that. Here's another one that comes to mind. This is some market history for those out there that like that sort of thing. Back in the 1970s and 80s, you had this ginormous inflation spike in the United States. Inflation was never ending, grinding higher, and gold was just flying high off that inflation fear. At the same time, it finally all came crashing down when the Fed chair, Paul Volcker, I believe was his name, he just got violently aggressive on rate hikes to an extreme, to a massive amount. I mean, this is why, like, our parents' generation, they were like, oh, just be a saver, because they were used to getting like 10, 12, 13, whatever percent sitting in the bank. That's because they hiked interest rates like madmen and women at the Fed to get this thing under control. Not necessarily gold, but the inflation problem. And so inflation was going absolutely parabolic. And then, gold was an obvious massive trade. They were not doing enough to stop it, kind of like with the Bank of Japan stuff right now. They weren't doing enough to actually solve the issue. And then they finally said, we're going to not only raise rates, we're going to raise rates. And if it means the stock market crashes, so be it. We've got to get this under control. And that was so serious that the market actually took it seriously. Finally, dollar strengthened massively, gold dropped dramatically, and gold went sideways for 30 years. So there's some really interesting, like, if you ignore all of that, can you imagine being the poor soul who like bought gold here thinking it's going to be a great investment, and 30 years later they're flat without considering inflation? It's tough.
Yeah, 100%. Yeah.
So
I love that.
Just understanding the context, understanding the story, I think, is really important. And it feels like you're driving blind if you don't have it. Like once you're in this stuff, it is hard to unsee it. So, Marilee, we are out of time. I got to throw the show back over to our other wonderful host here, Alan Perez. Thank you again for coming on. Gosh, our segments are awesome. I love the our whole crew here at A1. We've got such a wonderful group of fundamental macro traders, and guys, they are hard to find. So we found Marilee. She is we're slowly indoctrinating her into our macro community here. So thank you again for coming on. And again, we'll drop the link to your Instagram so that people can find you there. And thank you again for coming on.
Yeah, great time. We'll see you guys next week.
Okay, see ya. Guys, up next, we've got Alan Perez. Don't go anywhere. He's up after this quick break. If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream, or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, everyone. Round two. What a fantastic segment those two had. Loved it, loved it, loved it. Loved the macro talk. Loved the bond talk too. It was great. It was awesome to hear it. And yeah, lovely conversation. Let's go ahead and see what has happened here so far. On the FX side of things, nothing too crazy. I would say it's been pretty much of a stable day. You still have gold there in the red, but nonetheless elevated, potentially continuing its momentum to the upside. Dollar index too. I will say you probably will see some quiet low volatility going up until tomorrow, just because usually markets do kind of just wait and see and digest after the big event to go ahead and start, putting risk back on the table. In this case, we have FOMC meeting minutes next or tomorrow, so that's kind of what we're seeing. So I do expect maybe some quiet markets. I will say though, DXY, if you want to break this level here to the downside, I'm all for it. Do your thing, but probably won't see that happen today. So that's it. That's what I'm looking for on DXY. My other positions are doing okay. We're starting to see euro dollar pop back up here. Dollar Swiss as well. Hopefully for another leg lower, that would be nice. And gold is just doing its thing, still up there. So that's it. That's pretty much it. I'm not looking to add any new positions or anything. I'm pretty happy with how I am. Just going to be waiting for some clean technical moves. If we do start to see DXY hold this level here, the 200-day moving average and the 61.8, then at that point, I would reevaluate. I would probably take profits on euro dollar. I would cut my losses on dollar Swiss if it's still in the red, and I will look to repivot. I like dollar yen. So one thing I really liked about what they mentioned there, Marilee and Nick, is like, I like that if you can understand the structural kind of way this works, right? Dollar yen, that it structurally moves higher, right? The carry trade, all that stuff, all those drivers there that are just forces, magnets that move this thing higher, then you can see that whenever you have something like this, which is out of the ordinary, kind of artificial to the price chart, you can go ahead and buy the dip on that, right? So I love that. I love how she explained it. With dollar yen, that is a perfect example of what just happened there. So you had a structurally strong dollar yen chart to the upside, right? Naturally, it's going to drift higher because of the interest rate divergence. And then you had this yen intervention here, which brought it lower by a lot, very, very quickly here. So I'm just waiting for an entry opportunity for the long side on dollar yen. So whether that be 158 or if we get another leg lower, I'm all for it. But that's what I'm waiting for. Alan, do you set monthly profit targets? Absolutely not. It is what it is, man. There have been months where I am in the red or I am flat or I'm in the positive. I think when you assign yourself, I used to do this, but like not on a monthly, but on a weekly or daily. It's like when I first started, I was like, okay, I want to make like X amount per day or X amount per week. And what happened was I started forcing things to happen, especially if you have a weekly target of every single week, you want to hit X amount. Let's say it's $1,000, right? And if it's Thursday and you are at $200 or $0, you're going to try to make up anywhere from $800 to $1,000 because you have one day left, right? And so like that psychological thing really makes you lead into bad decisions when you really shouldn't. So I avoid the daily profits, weekly profits, or monthly profit targets entirely. It just is what it is. And when you care less about it, it just comes back to you. So it's okay. And to be honest, guys, usually there is a trade to be take at least once or twice a month, at least, right? So that's kind of how I operate. That's why I also say too, it's very important to have other things outside of trading. That way you're not just self-reliant on your trading income, because it's very normal for you to have a red month, a flat month, right? That's very, very normal to see. So to answer your question, no profit targets. It is what it is, and have something else on the side to go ahead and supplement. So whenever you do have bad months or flat months, you're not like stressing out. And then when you have really good months, then it's a really good month, right? So that's how I go about it. Yeah, there's absolutely no confirmation for UJ longs. Well, that's why I say I want to retest into here. So with UJ longs, what I would look for is, one, I would need to see a recovery on the DXY. We have a 200-day moving average and the 61.8 right here. So if you have a recovery there, similar to how you trade a single stock and you wait for the index to lead, I'm going to be waiting for the DXY to lead me on this one. If you start to see that, then I would look for a technical structure on UJ. Or I can get a pullback into this 200-day moving average. If you find support there, then I take it higher. So I'm not going to blindly buy UJ right here. I'm going to wait for either the DXY to confirm and lead, or I'll wait for a retest of the 200-day moving average, or a combination of both. But if you start to see DXY break below the 200 and the 61, and it falls lower, and you see UJ do the same thing, then perfect for me. Then I just get to wait and get a better cost basis, right? Ideally, I want a bigger retracement. So maybe it's not 158, maybe it's 156 or 155. The bigger the drop, the better. And then you bring up a great point too, falling knife in this small bounce. I would say that for this trade, there is definitely the risk of intervention again looming in the background, right? We can't ignore that, especially if you just, let's say hypothetically we get back to 160 or 161 or 162, and Japan's like no more, right? So you have that intervention round 3, if you will, in the background. So with that, if I were to take a long attempt, it would have to be with a very, very low risk size. That way I can absorb 200-300 pips worth of drawdown and not be affected by it. You know what I mean? So I'm not going to go in here with like 1 lot or 2 lots or 3 lots, and then I'm down 300-400 pips, and then I'm like, what am I doing here? I'm going to go very small and be open-minded to adding filler positions down here to go ahead and increase my cost basis. So yeah, with UJ, it's kind of like building a position is probably better than taking a standard swing trade with a defined take profit and stop loss level. You know what I mean? I would rather just build a position. So yeah, that's with UJ. Everything else though, 165 in September. By September, the futures. You know what though? I mean, we got pretty close to 165, right? We were way over here, so I could definitely see that happen, especially if Japan hesitates on their rate hike in September. If they start to flatten out there, that could definitely drift dollar yen to above 165, like 168 or 170 is definitely not out of question too. I do think though, like in 6-7 months time, you do see dollar yen above 160. I personally think that after the intervention stuff happens, you get a flush out, whatever, you have something crazy like a big unwind, and things start to stabilize, then it gets back to the origin point or even above. So that's what I'm going to be waiting for if that happens. And I'm going to do that by positioning very, very small to the long side. That way, if you do get an abnormal, very quick flush lower, it doesn't kill me. But I really, really like that trade. Hopefully I get it. Let's see what else we got here. Yeah, currencies are stabilizing. Aussie dollar's ripping higher. It's doing quite well. Where's my U.S. yields? Why are my U.S. yields up here? It should be here. Hold on. Give me 1 second. I got to fix this. Move it lower. Move it lower. Perfect. All right. U.S., what is it doing? The short end is still in a downtrend. I love to see that for rate hike probabilities getting diminished. And then the long end, it is very stubborn, guys. That is not good. That's not good. But the market doesn't seem to care at the moment. So it's kind of put that on the back burner. Silver, what is silver doing? Same as gold, right? Trending higher there, kind of flattening out a little bit, waiting for some decision. Just like a lot of the other asset classes, waiting for some decision for tomorrow. I'll remember that 0.6 long on gold. What 0.6 long? Like buying at a certain level? 0.6? Like the 61.8? This right here? I would love to get in right there, honestly. 4,200, that's like my preferred zone. That's like a really, really solid level for gold. If you get a retrace into that level, I'm very happy. As long as it doesn't disrupt the macro narrative, right? Like if whatever brings us there doesn't like completely question what's going on, then I'm a buyer of gold happily at that level. Oil here too. Not really doing much. Guys, it's been quiet. And you know what? I don't even have my flip-flop beans on right now. So it's quiet. I don't have coffee. Tough. Oh, the small position you were longing. Yes, I got stopped out of that position for a profit, and then I re-entered again gold here. And then right now my stop is at break even. So hello, Marco.
Hello, Alan.
How you doing,
What's
man?
up? I'm pretty well. Markets are a bit quiet, so I'm working on my stock strategy and stock picking. So the best times to work on your trading is when the markets are quiet and you can like quietly assess your performance. Waiting for the stock market to open in like 15 minutes. What about you?
Dude, very quiet day. Like extremely
Yep.
quiet. Like there's really nothing going on. So that's kind of frustrating from a streamer standpoint, because you obviously want to provide the best commentary you can. And I think we've covered it all. We've covered all of our bases here leading up until today. So we've talked bond market, we've talked gold many times, we've talked Forex. Like it's rough out there, you know?
I do have a question for you.
What's up?
So I thought of kind of which topics can we talk about to let's say move away from the markets for a brief moment.
Sure.
So you worked for JP, right?
Uh-huh.
And me and I think a lot of other traders are interested. So what is the main difference of the trading approach between a big institution and the guys sitting at home, like the two of us right now? So is like the trading style different? Are the time frames different? Do they have more of a hedge approach? Do they do like directional positioning? I'm not sure if you can talk about it, but I think it would be interesting for the viewers to hear what the big players are doing, because essentially we are trying to battle it out against the big institutions. So it's all a competition.
There's different verticals to the business. So you have high frequency, you have asset management, you have different stuff like that. I was not on a trading desk. Like if you refer to a Wall Street movie or whatever, like on a trading floor, that was not me. I was at a location at a bank. I was a banker, and then I was working alongside wealth management. So the approach was a lot slower. But that's one thing I can take and kind of add is like they are very slow. They have no real urgency to force anything. Like for one, we were helping high net worth individuals structure their portfolios. They're building brand new ones, and so by nature of the job, you were kind of working along their schedule, right? So like you can meet with them on one day, and then 2 weeks later, there's a pocket in their schedule. We can meet again to discuss what we left off on. So like definitely slow paced and longer term outlook. Like it's never like the conversation wasn't, and it would rub off the wrong way if we even did it like this. But if you were to have a client and you were to say, hey, client, there's a real big opportunity. You got to act now. Like this is going on. This is the new thing. Like for them, they would sense like, what the heck is this guy trying to do right now, with my money? So that was never the case. So it was always macro focus for one. There was never a recommendation that you need to buy this sector because there's a head and shoulders pattern happening on the 15-minute time frame and it's about to break. That was never a conversation. Like if that would dilute all of your credibility right then and there if you were to approach a conversation like that. It was very just longer term focus. What are rates doing? What, is it a risk on, risk off market? Are you overexposed? Like, depending too, right? Every person's different. If you have a younger entrepreneur guy that's making a lot of cash, then you want to maximize that and then probably go into equities. If you have someone that is in retirement age and they no longer care about capital gains and they want to preserve their wealth, then you scale back equities and put more bond exposure or more fixed income exposure or more like annuity exposure, right? So like that's how you would do that. And then people have different needs too, right? Like if you have lots of cash on hand, you want to invest, but then you have 2 kids going off to college within 2 years, then you probably don't want to go fixed income. You want to have some kind of liquidity product, right, where you can withdraw that money and not have it tied up for X amount of years. So it was very like slowed, I would say, slower pace, macro focused, and similar to every individual as a trader here on the retail side of things, you're really tailoring your approach to what works best for your personal situation. You know what I mean? If you are, if you already have a big portfolio size, a giant trading account, then you don't have to risk that much anymore. Like at that point, you're just letting your trading do the talking, and over time, compound is going to work in your favor. But if you are smaller size and you're trying to get it to that point, then you probably are more aggressive with it. So like it just depends on the individual style. And 2, like risk management. Like every time we made an investment advice or whatever, it had to go through a principal. Like it just had to. Like we were regulated under FINRA and the SEC, and so like there has to be a principal on site to kind of approve whatever it is you're making. That way, you're not giving a 75-year-old person single stocks or penny stocks, and they're like, what are you doing with this guy? Unless the guy really wants it and he clearly says, I know what the risk is, I really want this. But like that's also too, like you need to have risk management at the back of your mind. That is like the last hurdle that you have to go through before you actually start to execute.
Yep. And like that's exactly what I've been trying to tell, let's say, the beginner traders, that the institutions, they're not against you. You know, they're not on the other side of your trades. There's no secret algorithm. And the institutions are kind of like huge turtles. You know, they move super slowly because, as you mentioned, they have to get all of the confirmations and needs to go to through 100 people before they can actually put on the trade. But once they do put it on, they also can't enter immediately, which means they have to pile into it for a couple of days or maybe even longer if it's a massive position. So what does that do? Well, it usually starts a trend. And that's where we come in and we try to jump on some of those trends where the institutions are piling into the market like day by day by day by day. So I think people have a really wrong perception of the big players and the institutions. They're not the bad guys. There's no bad guys. It's a competition. It's like in football, you wouldn't say that someone is a bad guy. Essentially, they're trying to battle each out, and then the winner is supposed to come out the other end. It's the same with trading. You have 5% of traders actually make all of the money. So yeah, very, very interesting take, Alan, and thank you for sharing that. And maybe it helps some of you guys to not focus so much on like who's behind your trades and trying to blame someone if you lose a trade, and actually looking at how can you jump on the trend and actually exploit an edge over time. And
I think too, Marco, I think a lot of people have this idea that the institutions are always right and that you have to find them. And so you have like this obsession, I think, in retail where like their mission or one of their biggest objectives is like, what is the institution doing? What do I have to do? Right. And I think when you overemphasize and overvalue that, you can get very confused and you get very tied to headlines. So for example, there was a headline, I think when silver started to plummet last year or early this year, that JP Morgan was manipulating the silver market because they had like this massive sell order, and that was like the trigger to everything else, right? So like if you're a retail trader and you're constantly obsessed with finding out what the institutions are doing, you're going to see that headline and you're going to marry that headline, and then you're going to make investment decisions on that. But did JP Morgan offload a big amount of silver? Yes, they did. It clearly says in the report. But what does that mean in the context of everything? Were they only offloading 10% of their holdings of silver? That's different. They're just removing 10%, right? Are they reallocating? That's different, right? Are they adding hedging? Are they hedging, right? Is that why they're offloading? There's like so many questions to ask around that just one simple headline there, that very like vague headline that like if you have this obsession over like what the institutions are doing, you're just going to be caught off guard, right? Because if you see this big headline that JP Morgan offloaded how many tons of silver, and you see that and you start selling silver, but in reality, they were only offloading a small position in relative to what they got, then you're going to get smoked, you know, like you're going to step in front of a train. So for me, I'm like, when I think institutions, I'm like, I just want to see what the broader trend is. And like the Edgefinder COT data is literally that. It's just a net value of what it is. And you can see in a yellow line, is it trending upward or downward? Anything in between, whether Goldman did this or JP did that or whatever, I don't care about that. It's just, what is the net outcome? What's the trend? And just try to ride the trend and just zoom out a little bit and slow down.
Yeah. Is this the same thing as when people want to follow Michael Burry, for example? So they find a personality who had a lot of success in the past, and then they want to follow all of his takes. And when he buys or sells something, a lot of people pile in after him. But like, you need to know that we're all human. So we all make mistakes, and there's no one person that has 80, 90, 100% win rate. So that's why following the big institutions and just blindly following them or following the headlines is not a strategy, or it's most likely a losing strategy, because once it's out, once it's public, usually the opposite thing happens than what the headline actually says, because news outlets most of the time signal a reversal. So you should essentially do the exact opposite of what the headline is saying.
It's all about what we talked about what Nick talked about yesterday, which is self-reliance. Like, let's say you do find somebody that you can mimic, and they're just home run after home run after home run. What happens when they throw the towel, or they get sick and die, or whatever, or they retire? I don't know. I don't know what happens, but let's say when they're gone, what do you do then? You know what I mean?
Yeah.
That was we were in college, Marco, Alize, and I. We went to the same, and there was a guy, a friend of hers, and he had this like he was like an Andrew Tate guy, you know. He's like, and I'm not gonna say any names or anything, but he was like, you know, I want to walk into the room, and I want to be the guy that's like, you walk into the room and you know I'm that guy, right? And so we were asking, we're like, how are we gonna achieve that, you know? So he wanted to drop out of college, Marco, and he wanted to follow some guy on the internet's trading signals. And we're like, okay. And like, I'm like trying to do my thing, right? Like, I don't want to say anything or whatever, but I'm like, okay, he's going to drop out of college, throw that away, and follow this guy's trading signals. And Alize, like me, I'm very like laid back. I'll just let you do your thing, you know, let it unravel. Yeah. Alize is quick to like, what's up? So, so Alize was like, okay. So when you walk in the room and people ask you how you had your success, are you just going to tell them that you copied someone else's trading signals? Like, is that going to give you the feeling that you think you want? And he had this whole like revelation, and then whatever. And then he still, I think he finished school and everything. And I think he's doing well, but like,
thank God. Yeah.
But like self-reliance, right? Like, what are you going to do if the guy just passes away, right? Or whatever, like, what are you going to do? Right. So, yeah, that was just a quick story of that. And
100%.
Someone said this sounds like a podcast. You know, the best live streams, bro, are where you can just kind of diverge and go different routes. It's fun.
Yeah, I thought we would change it up a bit today. I mean, the markets are super slow. Like, we can talk about gold for 15 minutes and it's not going to be a lot of value. But I think this, like psychology stuff is pretty valuable as well. Because like, that's what I saw. So most people, when they come in the space, they hear the statement like trading is 15% strategy, 15% risk management, 70% psychology, which if you're a beginner, that's total crap. Trading is, when you're a beginner, trading is 90% strategy, because finding an edge, a real edge, is extremely, it's hard. It's very, very hard. And most stuff that is taught online doesn't really work. So like, when you're a beginner, it's 90% edge, 90% strategy. Then as you progress, then comes the risk management, then comes the psychology. But yeah, if you don't have a strategy, if you don't have an edge, and of course, following signals from some Andrew Tate guy is not really a good strategy. So that's the most important thing, and that's one of the like biggest issues that I see new traders face. Like, because the gurus, they love to say trading is 70% psychology. Then when you listen to their advice and when you don't make money, they can just blame psychology. So it's a good tactic, like a coping tactic.
It's so effective. I mean, it's so marketable, and I myself, like, I could see how when you're beginning, you can fall into that. And I guess that's why I get like super. You could see I got riled up there. I got very passionate there, because I had went through that. And I'm sure everyone that gets into trading also goes through that process as well. That thought process, like me too. When I started learning and I started finding like different educational resources, did I come across signals, and I was like, that looks interesting. Like, they called it earn while you learn, right? Like, that's the pitch. Like, that's the golden pitch. Like, you can earn while you learn, right? And it's like, oh, like, whatever. Definitely. So, like, just being, I guess, sharing that and trying to bring you back to reality a little bit and sharing the honest truth of it. To your point, Marco, when you market your trading like that, like, I'm sure, Marco, if you said, if you went out there and you flexed your Bugatti or your Lambo and you said how easy it is, you're going to do a lot better than me, because I have no Lambo to show. I'm going to tell you that it's going to be boring. It's going to take a long time and this and that. And you're going to fight with yourself. If I am brand new and I'm picking one or the other, I'm picking Marco over Alan all day long, right? Like, in that scenario. So it's just something you got to go through.
Yeah, I feel like the A1 community is like the last step. So first you find a signal scammer, then you probably go to a YouTuber with like 100K followers and a Lambo or a G-Class. And then once you find out that it's all a scam, then you come to A1, and then we can really talk about what trading really is and like give you realistic expectations and a real quantifiable edge. So I think I would like to say that we're the last step of the trader journey when they first come into the space. So that's how
which is good, because you have this like natural filter to where, like, okay, if you ended up here, you ended up here because you were starting to get fed up and whatever, and likely you stay for the long term. So although it's more of like a delayed type of thing, you're kind of, like you mentioned, at the end of the road there. Well, really, I hope not. I hope that from here it just continues to take off and expand and expand. So yeah.
Profitability should come after A1, essentially. So you
We're the gold that settles at the bottom. There you go.
What did the comments say?
He said, we're the gold that settles at the bottom. So to get to the gold, you got to like do all this and shake it up a little bit. And finally, you get a last little sliver of gold. And you're like, finally. So, yeah. Great analogy there, Nick.
Yeah, that's pretty good. So, but to talk about the markets just for a little bit, what do you have for today? So you have a gold position, you have a euro dollar long. I think you sold dollar Swiss. Did anything change?
Nothing changed. DXY, which it's slow today. So I would imagine that it's going to be like that until you see the meeting minutes come out. So similar to every major news release, you do have quieter volatility leading up into that, just because you don't want to, most of these institutions, they don't want to add too much exposure and front running any conviction. Exactly. If what ends up coming out contradicts it. So that's just the smart approach. So you do have a quiet market today. DXY is lined up with the 200-day and the 61.8, which is very important for me. So what I'm looking for, Marco, is one or the other. If you were to see a break of the 200 and the 61, that's just continued dollar downside, and I hold on to my positions, which is euro dollar long, dollar Swiss short, gold long. If you have a world where you do have buyers step in here and take it higher, maybe Fed meeting minutes comes out somewhat hawkish, or just something different that we didn't expect, that gives you the net reaction of a bullish dollar, then I start to look for dollar yen longs. I like dollar yen longs. I shoulda, coulda, woulda bought at 155, but I didn't. This was a really good discount zone that I even told you that I was looking for. But at that, once we got here, I was kind of like, maybe we get to like 153, 152. But with dollar yen, structurally, I think that you have the carry trade is still out there. It's still doing its thing. And I think that 6-7 months from now, you start to see dollar yen at 163 or 164, unless you have some kind of a rapid rate hike cycle in Japan. At that point, that disrupts the idea. But for me, I kind of like the idea of like buying dollar yen, and not like a traditional swing trade type of way where you have defined stop loss and take profit, but more so like DCA approach, right? Build a position if it gives me that, and then just catch the appreciation to like 161, 162, 163. And then along the way, I'm just collecting positive swaps. So this is definitely more of a longer term kind of like building out this position type of trade.
Yeah. Personally, I think we actually hit 164 on UJ, because if you look at the last 20, 30 years and you look at what happened before a big turnaround in USD/JPY, you had the initial intervention, initial correlated intervention between US and Japan, which we got. And then we took out the highs once again, and then we got the big trend change. So it happened 2 times in the past. Is this going to be the 3rd time? Very likely. And the price seems to be trickling to the upside. I would say what you mentioned, like if the BOJ starts doing back-to-back rate hikes, that definitely changes the story and tells us that the BOJ is serious. So we're going to have to wait for the next BOJ meeting, which is in September. So everything that we're looking for is coming out in September. September will be a big one.
Yeah, so that's kind of what I'm looking for. Other than that, Marco, I'm kind of sticking with what I have.
Yep.
I don't see anything new. That's the problem, is I don't see anything new. So there's really nothing for me to act on.
Yeah, I'm the same. Just focusing on stocks at the moment. That's the only thing that seems to be moving, and just waiting for more development. I think Jackson Hole meeting, August 27th, probably going to be a non-event, with Kevin Warsh being the most boring Fed chairman ever. But the NFP should start to kick things into gear. And it's the beginning of September. The bankers come back from the Hamptons, and they're back in the office. They're executing positions. So the big institutions will be back online.
Absolutely. Well, with that, Marco, I'll go ahead and leave you to your portion of the segment. I'll go ahead and pivot out here. This was fun. Thank you for opening that conversation and going the way we went. That I appreciate that made the live stream super easy, and I hope that it resonated and it was interesting and it was valuable to the viewers out there. So thank you for that, man.
It was definitely fun for me, and I'm sure it was fun for the viewers as well. I think Nick watched it in the background as well. Thanks, Alan. Looking forward to tomorrow, and good luck with the positions.
All right, man. Take it easy. Bye-bye.
You too. See you. Goodbye. So let us continue. Let's see what I have for today. Have we opened? Yes, we have opened. Okay. Stocks have opened. Let's see the SPY. The SPY gap lower. So not a great day for stocks. My individual holdings are RHI. I'm out of this one. VLO, I'm still in. So this one is running well so far. CoreWeave, I just got taken out for a loss on this one. Dell, I'm out. And I'm looking for any new breakouts of the you have the pole and you have the flag. I'm looking for a breakout out of the flag. So let's run through these quickly. Nah, nothing much is happening here. Okay. So just to talk about briefly why I'm focusing on stocks. Essentially, in trading, you're only going to have 1 or 2 asset classes that are hot at a particular moment in time. In 2025, it was gold. In 24 and 25, it was Bitcoin. You had stocks from April to, I think, May or June was a good run. Like if you look at the ETFs, you look at the SPY. So the SPY and the Qs, they had a good run from April, or actually from April to June. And then they were flat. And then you may have traded currencies during this period. Well, now stocks are active again, but currencies not so much. So let's just look at some asset classes, and for me to show you what's active right now. We look at gold, first one. For most of 2026, it was pretty boring. Not much you can do here. Trend following was tough. We had a breakout, yes. Potential buy setups right now, yes, but we are still below 200 SMA. Not my favorite thing. I will take a position if we get a pullback, but not my favorite thing to trade. Then we look at the dollar, which is, I would say, the best indication for the currency market. We have been in a flat range for months. Ever since July 25, we haven't moved much. And the dollar is the biggest currency in the world. So if you want to do something in the Forex market, you do need to see some volatility happen on the dollar. Crypto has been dead. Crypto has done nothing. Yes, a big bear market. If you're a seller, then you may have done well. But lately, from let's say Feb 26, just nothing. Very tough to trade this market. If you're on X or Twitter, same thing. Like all of the crypto bros and the crypto accounts, they're very, very quiet. Altcoins, they heavily depend on the interest around Bitcoin. So if Bitcoin is doing nothing, the altcoins tend to be pretty dead as well. Energy. What about energy? You look at something like Brent oil. Impacted by headlines, Middle East, closure of the strait. So pretty tough to trade because your edge heavily depends on Trump and on Iran, which those variables are probably impossible to predict. You can get access to the Trump API, like the Truth Social posts in advance, but if I'm being honest, that's probably crap and isn't worth much. I think they did a study. So I know of a guy on Twitter who did a study of Trump's previous posts, and he determined that there's so much noise in the posts that even if you caught the nice winners when his posts actually did matter, you would lose a ton of money betting on the other stuff, on all of the noise. So 100K per month, from the studies that I saw, definitely not worth it. And from Trump's track record, absolutely not worth it. So to trade oil, it's pretty much a gamble. Pretty much a gamble. Let me take a look at my Hormuz traffic. Let's take a look at Hormuz traffic. Okay, it did populate. The latest number is August 16th. August 16th, and just nothing. So the strait is clearly still closed. So oil is off the, let's say, watch list. Tough to trade. What else can we do? Bonds. You can look at the 2-year, you can look at the 10-year, the 20, or TLT. Maybe you could have sold TLT. Maybe that was a valid trade you could have done. I think the overall volatility in bonds hasn't been that much. Like we have been in a flat range on the 2-year ever since 2022. So like the opportunity here is not that great. And finally, we look at stocks. Stocks, they seem to be the only thing that's actually moving on a pretty nice uptrend. Yes, we had a quiet period from June to July, but we then had a breakout, pretty nice breakout with a lot of momentum, signaling a potential new bull cycle. So that's what I like about stocks and trading stocks right now. Clearly, the capital is going into stocks. We looked at many classes. Most of them are crap. Most of them are boring, flat, neutral, but stocks seem to be moving. So right now, I'm employing my breakout strategy on individual stocks. That's the plan. I do want to mention the sponsor of today's show, which is going to be Ola Prime. So if you guys are looking to get funded, Ola Prime, you can get 20% off with A1 Live. So Ola Prime, do take a look at the reviews, open up the Trustpilot. Don't take my word for it. See what other traders are saying. Join the A1 Discord. So, sorry about this. So join the A1 Discord. Look at the traders in there. Some of them have gotten steady payouts. What I like about Ola Prime is that there is no consistency rule. That's a big important factor. So no consistency rule. And you get a pretty good price with the code A1 Live. You get 20% off. Link is on your screen, in the comments, and in the description as well. So you can't miss it. Trump news, facepalm, probably illegal as well. You pay 100K for API to see memes. Just got here. Have they reviewed gold yet? That's not what Trump says. Marco, the only FX pairs where I see volatility is Aussie NZD. I'm swing buying from last week. Capital moving into stocks. Okay, bro. Aussie NZD, let's take a look. And that's going to be the last thing from me today. Aussie NZD. Yeah, it is moving. I prefer the Aussie dollar if you want to do something with the Aussie. I think the Aussie dollar is a bit more bullish. But Aussie NZD is not so bad. The NZD has a bunch of rate hikes priced in. I think they're not going to happen. It would be crazy to hike so much with a bad economy like New Zealand has. So I think in the upcoming few weeks, the NZD will lose value. But I'm not looking to trade it. I'm not looking to place a trade just yet. The only trade I would like to do in Forex is probably on the Aussie dollar. Some sort of a buy position. I think that makes a lot of sense. So that's it for my segment. You have Tiger coming on in 30 seconds. I want to thank you for watching. You can catch me tomorrow during the FOMC meeting minutes, and I wish you good luck. So yeah, that's it. Goodbye.
Don't go anywhere, traders. The show will be right back with our next show host. But before we get back to the show, I wanted to mention today's live stream sponsor, Ola Prime. Ola Prime is one of the fastest growing prop firms that I've seen in the space, and they offer a super wide range of different account types. Whether you trade Forex or futures, whether you're a swing trader or you're a day trader, they have multiple different account types, and they have some of the most competitive pricing that I've seen in the industry. And check out this publication from Deloitte, who did an audit during a select period of time on Ola Prime and its payout legitimacy. One of the big things that Ola Prime is well known for is their very fast payouts. They have this posted up all over their website as one of their main reasons that traders like them. From what we've seen, they also have a very strong reputation overall within the trading space, and they are a proud sponsor of our everyday trading stream here. And for a limited time, if you use our promo code that you can see on the screen right now, A1 Trading, you can get 20% off any of their accounts. And using our discount code lowers the barrier to entry, meaning that your challenge costs you less and gets you that much closer to potentially getting a payout someday. Of course, to throw my 2 cents in there, I'm a big fan of not trying to get funded until you feel you are actually ready to do so. So if you feel you have the skills, if you feel that your trading is up to par, and you do your due diligence on Ola Prime to see if it's right for you, then make sure use our promo code to get that extra discount at checkout, and we'll be dropping the link to them down below in the live stream chat. You can also find it in the description, and we'll have a QR code on the screen right now that you can scan if that's easier for you as well. So thank you to Ola Prime for sponsoring today's live stream. Now back to the next show.
What's going on, everybody? Happy Tuesday to you. Hope you're doing well out there. As always, let me know what you're looking at. Let's see what you got. We'll look at the top setups. We'll look at some gold, silver, some major pairs, and oil, anything else you guys want to look at. So definitely throw those tickers in the chart if you would, and we'll check them out. And as always, definitely keep in mind, just like Nick said in his commercial there, keep in mind the Ola Prime code there, the 20% off of the account of your choice. A1 Live is the manual code to enter, or you can scan the QR code. So, yeah, where do we stand today? It's Tuesday, another day in paradise. Going and looking over here at the top setups, we did have, we still got pretty well the same assets at the top, still the same ones at the bottom. We did have a little bit of change, though, on a couple of these pound pairs, because they did have a high impact event that came out as a miss. That was the unemployment rate over here, guys. Bearish vibe on that. Little bit of a 0.1% increase for that. So we've dropped for the pound down to 33%. But you guys know the dollar is even lower than that, down here at 18%. So still down there with the yen. And Canada, after their inflation numbers came in better yesterday, or came in hotter or warmer, if you will. They actually pushed to the top of the list. So, so anyway, that's just your up to the minute look at the pound and all the other major currency pairs. So pound getting a little bit of a decline. And that is why, going back to the top setups, that's why you see these little -2s over here by the pound pairs. So, or -1, just depends on how the relationship is with the other currency. So yes, a little bit weaker, but still strong overall. I don't mind seeing that so much, because sometimes that can push price down to my zones of demand I want to look to buy from. So, you know, as long as we maintain that very bullish score, that's all that really matters. I mean, when you start comparing and contrasting all the other fundamental items on here, the sentiment and the technicals, things of that nature. So still strong overall. Perhaps some of that could add in some weakness, temporary weakness, to get down to my zones. So yeah, let me just go ahead and toss in your tickers there. We'll go ahead and take a look at gold, silver right off the bat. You guys know that we do have those overhead zones. I've been complaining about the last week or so. We had 3 really big rejection wicks last week. It's finally a tiny bit of a decline on Friday, but now we're pushing back up into that area again. So nothing has changed for me on gold, silver. Still need to see a retracement down and give me a discount to some of these zones at the bottom, or break and close above that structure and then reevaluate at that point. Okay, whether we have a new zone created up here like a flip zone, or if it still wants to decline all the way down, I'll take whatever it gives me. The bigger the discount, the better, because that typically means the higher probability, right? It's a little for me as a supply and demand trader, it's just a little bit more sketchy trying to buy these immediate breaks and retests, just because, you know, oftentimes, I don't know, it's just not as big of a discount, right? Remember, I'm a cheap ass. I like to have those big discounts down to here. So I'll take whatever it gives me, though. Just got to wait and see what happens if it finally chews through, or finally does give us that pullback. Gold, silver, obviously at the top of the list on the top setups. And there's your picture of silver as well. Exact same picture. Either break the structure, break the zone, retest, or give me a retest all the way down to some better discounts. So that is the gold, silver look. Pretty well the same thing as yesterday, looking at it from the aspect of the higher time frames. Okay, so that is that. Take a look at oil while we're here. Still kind of chewing through one of these other zones as well. A little bit of supply confluence going on over here. Got a daily, got a 4-hour. Remember, we had that gap down, and I drew in that red candle showing that that's basically what it is. So, yeah, still nothing to do on oil. And guys, I yawned earlier, and my tears are burning my eyes for some reason. I don't know why. So I'm not crying, I promise. My eyes are just super irritated today. So just ignore me. Ignore me. Sell gold. Well, you can sell gold, but the challenge you face is this picture right here. Right? The dollar's been super weak. It's been missing expectations on everything, left and right. Got a whole bunch of red on the screen. We did have an additional jobs data set that went bearish last week. That was that jobless claims number that we had previously had, I don't know, 2, 3, 4 in a row where we had beaten expectations. And so all of a sudden that turns around on us. And now 4 out of 5 data sets for the employment data are bearish. So it's just not looking great out there right now. Not to mention the GDP, some of these other retail sales we had, some PPI, some wage growth, stuff like that. So it's just not doing well. And because of that, gold has been, you know, kind of having that reciprocated view, the other side of it, taking the other side of the picture. So if you're trying to sell, what was that gold? Let's go back over here. Yeah, you're fighting the trend. I mean, you do what you want at the end of the day, right? But the way I look at it is you'd be fighting the upwards trend. Broken all these structures here, higher highs, higher lows, EMAs pointed to the heavens. That's that alligator's mouth opening up, the dark red, the 8 EMA, higher than the 21 EMA. But you are in a pretty okay supply zone. So again, I'll tell you what to do. But if you shorted this area, it wouldn't be the stupidest thing in the world, because you're shorting into what looks like a pretty decent, pretty okay supply zone. Especially when you drop into the 4-hour chart, the volume picture starts looking a little better. It doesn't look the greatest, I got to be honest with you, when we look at this area on the daily chart, talking about this supply. And it's really not the greatest even on a 4-hour. I mean, here's the deal. There's your last green candle before the drop. That right there would technically be your first bearish candle. This would be your second. So the second candle gives us a red above average or ultra high volume bar, right? But not the immediate leg out. And I know I'm splitting hairs here, but guys, this is just a picture that I'm not the biggest fan of if I'm trying to short. Let's say EdgeFinder was telling us to short this thing, or not telling us, but suggesting. It's not that great of a picture on the 4 hour. So I think I'd have to drop it down to a 1 hour, which we're starting to get a little bit more into the weeds on this, a little bit more noisy. But if you go to the 1 hour, the picture looks pretty good. All right. This right here, that green candle, that would be our 1 hour supply. And what is our leg out candle giving us? Above average volume bar. And then the candle right after, the next two candles are those ultra high volume bars. So yeah, maybe a 50% push into the daily supply might be a good spot. As always, guys, just like it says right here at the top, not financial advice. Trading is high risk. So, if you're just a technical trader and you're not paying attention to the EdgeFinder top setups, well, hey, these zones work pretty nicely. So do your own due diligence on this stuff, but that's about the best I could do. I'd have to break my rules in the meaning going from the fact that we had a really strong push up, and now I'm going to rely on a 1 hour zone, right? A 1 hour zone. Now you got the daily as a benefit of it, but again, the daily leg out. Does that look like a yellow or a red bar right here? See, the volume on that time frame didn't match result. Effort didn't match result. So that's just what I see. But that's at least an idea of what you could look at. I wouldn't want to trust a daily demand down here pushing through and getting reversed by a 1 hour zone. It's just the big difference from daily to 1 hour. Okay. Now the silver picture looks just like this, right? Just like this, pretty similar. In fact, the 4 hour chart over here, you can see where it's already wicked in twice. The red rectangle, once, twice, thrice, crice, I don't know. Quadenta, 4. I was trying to be fancy there. But anyway, yeah, you're basically just chewing through overhead supply at this point on both these assets. And I have zero interest in buying when we are hanging out in overhead supply. So either give me a retracement or break structures, break those zones, just like that yellow projection line kind of suggests, right? So same picture as yesterday, but yeah, hope that makes sense for you on oil, on gold. Put call ratio of, yeah, let's go look at the put call ratio of gold. Good call on that, because I haven't looked at that today. Let's see here. Crowd sentiment, put call ratio rather. Let's go to gold and get you guys an updated view of this. Gold. So there you go. We've technically moved back into neutral, but that's still pretty well high call volume. So again, you got a lot of bullish bets up here. You got a lot of people in that overhead supply I just showed you that are still trying to buy. That's where the bulk of the put call ratio is saying is long. So, the easy way to look at these charts, guys, when you look at the put call ratio is if it's down, that's where we look at it as contrarian to sell. If it's up to the red or higher, that's a bullish contrarian reason to buy. Okay. It's kind of the opposite. If you think about it, if you go look at something like the put call wall, let's see here. Yeah, put call wall. Because whenever we get those call walls that on the new tool that Nick added here, which is still, I don't know, this is pushing put call ratio is one of my new favorites, guys. I got to be honest with you. But when we go to this one here, it's just kind of a little bit of an opposite look. Okay. When we go higher and we start bouncing into these overhead walls, well, it's kind of the opposite of the put call ratio. We would not want to necessarily be buying. We'd probably look at that as a rejection, where the banks will allow those transactions to take place and then rug pull. Okay, that happens all the time. A great example of this, look at this on Bitcoin. We already know Bitcoin's been going sideways for quite a while. See those two green lines? Those are call walls. And then this red line is a put wall. Okay, I just measured it out, used my measuring tool along with the Bitcoin's ETF that he has on the put call wall tool. And look at how many times price bounced off of these lines, guys. So again, right here as an example on the put walls, price bounced in, bearish bets, only to get rejected. Bounced in, rejected. Bounced in, rejected. Same thing up here on the call side. Look at the top. Look at this top call wall. Bounced in, tagged them in, rug pull. Bounced in, tagged them in, rug pull. Even on this other call wall right here, the middle green line. Tagged in, rug pull. Tagged in, rug pull. Do you see how this is a vicious cycle? Do you see how this is a shark-infested waters? Okay. A dog-eat-dog kind of a industry. That's smart money knowing what they're doing. That's dumb money not knowing what they're doing. So that's the power that this put and call wall tool has, is when you can go line up all these spots, all these bigger blue lines, all these bigger red lines underneath, and just get an understanding that, hey, price is very likely, not guaranteed, but very likely to bounce the opposite way. It'll make them feel good for about this long, those traders that actually got tagged into their orders, only to get the rugs pulled on them. And that is why I love finding these put and call walls in my supply and demand zones. So you had a supply zone back here in the past, lined up perfectly, dropped. Had one right here, lined up perfectly, but still testing that one. But you had this one right down here, just a little bit higher up. And yeah, I've went through, done a little bit of back testing on this for quite a few assets. It's just works like a charm, guys. Okay? Nothing's guaranteed in trading, but that's just one of my newer confluences I like to look for. So yeah. And all the upgrades, you guys, all the upgrades we get on the Edge Finder, you don't have to pay for. So you can pay for it once, and then you're set for all the free upgrades as Nick continues his 1001 tasks that he has as far as improving this, and the stock box for that matter. So if you guys have not gotten a copy of the Edge Finder, highly encourage you to go check that out. Let's see here. Short-term maybe down, probably at least 100. Dumb retail around 80% on the buy side. We having to wait for them to get liquidated with good correction, then good buys. That's right, Karamba. Isn't it crazy how this game works? Right? We were all that retail. We were all that dumb money liquidity at one point. I'm sure some of us still are. Right? But stick with us. We'll help you get 1 cent better a day. And that way you can start reading charts like we just showed on right here on Bitcoin. Right? Good example. That's like a picture perfect example, I think, of all the times that liquidity has gotten swept. Okay. So, now having said that, Bitcoin is giving us a bearish setting, a bearish bias. Ethereum as well. I think he's got Ethereum on here now, guys. Ethereum. I think I saw Nat Gas on here a time or two. I know I asked for it at one point. So thank you, Nick, for adding that on. But yeah, when it comes to the crypto side of things, get a little bit of a bearishness. So Bitcoin -5, Ethereum -7. Let's go look at those. I've never looked at Ethereum on here with you guys. We just saw Bitcoin. Well, I got a supply zone up here, and what just so happens to be right there? Call wall. Okay. What's my trend look like though? See, here's where my problem is with Bitcoin. And I haven't even looked at Ethereum, so we'll look at that in a second. It's the moving averages. It's the fact that we're just straight sideways on a daily chart. So this would basically have to be a sideways trend type of a transaction. And I just don't like to do a lot of those. So, but I don't know. We'll see what happens if we bounce into that set of zones. Probably will not take it because did this supply, okay, the daily, the 4 hour, did it break a demand zone underneath? Nope. See this, you see, this is why I drew this lineup, this red line at one time. I wanted to see it break and close below the demand zone, but it didn't do it. The demand zone did its job and pushed price the other way. It ping-ponged, right? Remember, price is the ping pong ball. Supply and demand zones are the paddle. If you're talking table tennis here, right? It didn't do that. So because this supply zone did not break structure, do I want to necessarily trust it with my money? Probably not. So that's why I say we just got to break out of this trend, this sideways congestion. That's a black hole, guys. And that's, again, looking at my time frames, the higher time frames. Yeah, you go down to if some of you guys are 1 hour traders, 15-minute traders, you'll likely have better signals than me, but I just don't have them with the way I trade. So that's why I haven't even been interested in Bitcoin for quite a while, outside of watching those put and call walls kind of ping pong price back and forth. Ethereum, same thing, bouncing into daily supply. We've already wicked in a time or two, and it's just like Bitcoin, just going sideways. So same thing. Need to see a break and close above, retrace, and find something better at that point. But right now, I don't want to FOMO. I don't want to risk anything when the picture is not right for my particular trading strategy. Okay. So let's see here. So yeah, that's Bitcoin and Ethereum. Again, and also for Ethereum here, okay, it's given us a -7. However, higher highs, higher lows until we go sideways, and the EMS are going straight sideways, right? So my mechanical way of verifying trends going sideways as well. I just don't like the picture. Not on the daily. Okay. But oil bouncing in. Oh yeah, we just looked at that. Oil is bouncing in this. I'm doing a project for a piece I'm doing with my other company, so that's why you guys see all kinds of things over here. So just ignore that. It's basically a project I'm creating where I'm writing a script to show what would happen if you had a demo account and you took every Trump tweet or every ceasefire tweet or news piece and just placed an order right then and there. It's something that they're having me do. So yeah, I'm just kind of doing some back testing on that. But anyway, guys, what else you guys got over here? Bitcoin, East Immer ein safer short. We got some German going on. Bitcoin is my safer short, I think. I think that's how that translates. Yeah, well, that's the thing. You're in the supply zone. So just again, take it with a grain of salt. But yeah, I mean, again, if you're a sideways trend trader, that's technically how they do it. Sell at the upper end of the consolidation, buy back, buy to cover at the bottom, or vice versa. Buy and then sell to cover, just ahead. So let's see here. Look, net put call ratio of gold, is it still elevating? Yeah, that's the one we just looked at. We'll go double check one more time for you. The put call ratio on gold is still high call volume. I mean, it's not like it's in the middle of this scale. It's at the bottom. So, this is basically saying you would want to look at this as a contrarian reason to sell, but it's kind of going against what the edge finder is saying. And I know Nick's touched on this in some of his videos lately. He's wanting to buy, right? But the crowd is still long. We want to observe the masses and do the opposite. If the crowd is long, the smart money knows how to find their stop losses. So if we get some stop loss liquidity hunt and we get a retracement on gold, then that's where we can look for the bigger discount. But it's a double-edged sword, because if you're looking to play it that way, to where the banks liquidate them, well, then you're going against the top setups. Then you're going against the way all the data is laid out, which is bullish for gold, just like it's bearish for the dollar. So yeah, that's just your call. We all have our own risk tolerance. If that's your tolerance, I wouldn't full port any trades. Maybe just put a teaser in there. It's kind of like the way people have been playing the Japanese yen for the intervention, right? That thing's just been going strong uptrend. It went strong uptrend for quite a while. What are people trying to do when we get up to those 159, 160, 161 levels on dollar yen? They're trying to short. Okay, they're basically trying to stop a rocket ship, but they're doing it because of the intervention piece. So I don't know. That's kind of the way I look at these pictures on these assets right now, as far as Bitcoin and that. Major currency pairs, guys. Go have a look. I think I've caught up on you guys about you saying Finax will hate that about what you said on Bitcoin. Yeah, esophagus. Yeah, we don't say anything to make anybody happy. We just say what we believe, right? For me, it's 12 and a half years of study of this stuff. It's not going to be popular with everybody, but again, they can obviously choose to listen to it or not. But yeah, for the perma bulls, they're not going to like that. Data's down. We're in supply zone. Path of least resistance, I think, is to the downside, but it's just the trend right now that we're kind of, messing around with right now. Trying to get out of that what once was a little bit of an uptrend that turned sideways. So, yeah. We're not here to make friends. We're just here to tell you what you need to hear. That's all. Although I do like to have all my friends, so you guys are still all my friends. Aussie dollar longs, we did bounce into supply, so I need a discount on this. Guys, these major pairs are still pretty similar to where we were at yesterday. Still bouncing into all these overhead supplies. There's the euro bouncing into overhead supply. The pound is probably the prettiest looking one because we did finally break through this zone here, and our next major resistance is still quite a ways away up at the 136 level. We're at 135.45. So we're 55 pips away, but I need a rejection. I need a retracement. Retracement down to the zone that I drew up with this white circle the other day. Okay. Or yesterday. It might have been yesterday. 2-hour demand, strong volume on the way out, bounced into that overhead supply, finally chewed through it. This was the last place that it based. This was our consolidation. This was our contraction. Okay. We talked about this yesterday. Contraction, expansion up, expansion down, trend phase. So nothing has changed on pound dollar, except the pound got a little weaker, and we'll see if it happens. If it just so happens to help us get a little bit of a decline, about a 50 pip decline is what I need on pound dollar for that long. So Kiwi dollar bouncing into supply. Again, these are all 4 bullish, but 3 of the 4 were bouncing into those overhead resistance points. So just need a big discount. Discount down to a better demand, and we're good. Dollar CAD, dollar Swiss are still, I do believe, bearish. Is that right? Dollar CAD is all the way at the bottom, -8. Dollar Swiss is bearish, -6. So remember, dollar CAD, I think, is probably going to be the better looking one because of the fact that we've at least broken through this daily 4-hour demand over here on the left from back here. Broken, closed. We had and again, this looks very similar. Dollar CAD. This looks very, very similar to pound dollar, only in reverse, because we had that equilibrium point. But in this case, and that, of course, was contraction. But in this case, we had expansion down. I need another expansion up to supply for my short to hopefully find my trend leg. Okay. So a lot of work to be done on this one as well. We're about 100 pips away. Dollar Swiss, the picture over here is still not good because we still haven't broken these white lines down here, the structures. I still need to see a change of character like that yellow projection line would suggest to see that, hey, we're at least trying to move down. Which, again, this picture looks very similar to my confirmation entry. Once price bounces into my zone, when everything else looks good, and I'm looking for that change of character the opposite way to find my second zone, my second chance demand zone or supply zone. This is kind of a similar picture, only this is just getting to the zone. So need to break structure, need to retrace and find a premium at that point for a possible place to short. But EMAs, okay, my 8 and my 21 moving average still going pretty well sideways. That's the alligator's mouth slamming his jaws shut. Got to see some separation between the 8 and the 21, along with these break of structures, which to me is the most important part. If we bounce into the overhead supply zones, I think I might have mentioned this to you guys. I just think that would still be going against the trend. It offers a premium relative to this swing low. But again, do you guys see a break of structure to the downside? Have you guys seen a change of character anywhere through here? I just don't see it. It's still higher lows, right? So that's where I'm being careful with dollar Swiss. I like selling the dollar. I love the idea of selling dollar, but just don't like it. Dollar yen is still all over the place. It's still chewing through this 4-hour supply. Okay? Nothing to do on dollar yen, still giving the neutral signal. So I got like 2 minutes left. What you got over here? I can't believe how fast my slots go, guys. Just want to ask your thoughts on dollar yen. Do you think Japan is leading towards 5 to 6% interest rate at the end of this year? Ooh, I wouldn't know about that much by the end of the year. 5 to 6% interest rates at the end of this year. I wouldn't think it'd be that. I wouldn't think it'd be that much. That sounds pretty damn high to me. 5 to 6%. What are they at? 1.25%. do we have? I might have to dig and see if we have a. I'll do this after my stream ends, but yeah, I'll have to look and find. I have a section somewhere that's got the interest rate movements. I don't know. 5 to 6 sounds way too high because I think we're at 1.25 or 1.5% right now, and that took a while just to get to that. So carry trade scanner, dollar yen, 0.75. I'm sorry, 0.75. That's right, because they were at 0 forever, and even in the negatives prior to that. So I don't know. I don't think so. I doubt it. But I wouldn't know. I wouldn't know that deep of knowledge. That just sounds like too big of a hike too quick to me. Let's see here, guys. But the yen is looking pretty crummy down there. It's actually down there with the dollar when you add in the sentiment, the technical side of things. Yen currency traders, dollar currency traders, futures. If you're a futures trader of the yen or the dollar, that's pointing south for you as well. Keep that in mind. I went through that. Oil, euro pound. I want to end on that because that was the other pound asset I haven't looked at today. Yeah, so this is pretty well sideways as well. Got a supply overhead. Got looks like a demand I drew up that kind of tagged in, got a closer supply. So yeah, I just didn't have the moving averages in my direction to be trying to short this thing. By the time the 8 EMA fell below the 21, it had already bounced into this demand zone right here. And what did it do? It grabbed price and pushed it back up. And now it's fighting that smaller time frame supply. Telling you, price is your ping pong ball. Supply and demand zones, especially on the higher time frames, is your paddle. That's all price does all day. It ping pongs back and forth between those zones, between put and call walls, okay, things of that nature. So, guys, pay attention to liquidity. We'll try and teach you a little bit each day. It's really what moves markets. Okay? Volume and price action, some geopolitics, some fundamentals. That's your formula. Making sure we're on the side of the big banks, the smart money, making sure we're going against the contrarian crowd. Okay? 90% of traders lose money. So we want to exploit that, as crummy as that sounds, right? But you guys are not the 90%. You guys are not the smart, the dumb money. We're going to help you out with that. So, ladies and gentlemen, that's all I got. Have a wonderful day out there. Get ready for tomorrow. Again, we will be on, all of us, later. I'll probably be one of your, well, no, I'll be on. I don't even know what time I'm on yet. I'll look. But we'll have a later show because of the FOMC minutes. It's going to be a good thing to see how different it was, if it is different at all, from Chair Warsh's speech a 3 weeks ago. See if it's any more hawkish, any more bearish, or hawkish or dovish. See what they have to say about inflation, the crummy jobs numbers we have gotten lately. It's going to be interesting to see what's different. So we'll dissect that for you and more tomorrow. Have a wonderful day. Stay safe. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.